All right, are we live? Are we live? I think we are. It's 7:30 a.m. Eastern. It is Wednesday, January 10th. Can't believe it's already January 10th, 2024. Welcome. Got a new setup here for the stream, so excited about that. Hopefully it's a little bit more clear for you guys to see. Now, what I've done today is I haven't posted the pre-market forecast in a separate video because I think it just makes more sense to do it during the live stream. So we'll go ahead and jump into that here quickly as we prepare for our 8 a.m. hourly check. And let me go ahead and get the charts all squared away. Got to get the streaming software here ready. Make sure everything's looking good. It looks like it is. Right. Fantastic. Okay. So go ahead and jump into our pre-market analysis here quickly. We're going to look at the monthly, weekly, and daily charts. Take a look at what we had for yesterday. Let's go ahead and open up drawing tools here. Here we go. We're getting the drawing tools nice and set up. And now we can draw. Fantastic. Okay, so let's start off quickly with E-mini S&P 500. And what we can see here is the last couple days haven't had any trades, and I'm okay with that because I've been kind of letting the market work itself out as we deal with daily resistance here, trying to be broken, and weekly resistance here, trying to hold price. So these two energy levels, the daily's pushing up, the weekly's trying to push down. So you've got cross currents here. That makes for very difficult trading conditions, which is why I've been playing it on the safer side the last couple of days. And that's really, the smartest thing to do in my view. When you can see that you've got cross currents going on here, you want to make sure, number one, that you can see that there are cross currents. And number two, that just tells you with the time and experience of doing this, you know, okay, now is not a good time to, push the pedal down to the floor. So I hope that makes sense for you guys. Let me just check the software here, make sure it's okay. Yeah, we're live. Okay, good. So that's why I've been, a bit on the careful side. And you've got to know, you learn through many years of experience doing this, you know when to put the pedal to the metal and be aggressive, not only in getting in more trades, but putting in bigger size. The market does give plenty of opportunities to do that. I'm excited for us to be able to do that together when the right opportunities present themselves. But for now, it's a really good time just to kind of, let the market resolve this current state that we're in, which is a wrestling match between the daily and the weekly energy. And right now, it looks to me like, you see, the daily's trying to win. We're trying to push higher, but that weekly is still pressing down. So we really, it's anybody's guess. This is tough to read. Back here, this is much easier to read. You see that the weekly is just, flying to the upside here. This is when you can make a lot of money. And then you see right here, you get this transitional period, boom, congestion entrance. This is where you got to be careful. And if you know where to be careful, that's really going to help your overall P&L, because you're not going to be taking, stupid trades. You're not going to be blowing account capital. You're not going to be blowing mental capital, confidence. All these things are super important. And when you can see when not to trade, that's just as important, if not more important, than the trading itself. Because, like I said, it'll maintain your mental capital and, of course, your account capital. So keep that in mind. All right, so there's ES. Still not entirely sure what this wants to do, so I'm going to give it time to work itself out. Let's go ahead and look at the NASDAQ. NASDAQ's looking very similar here. Looks like it, it's looking to me at this point, even though the weekly resistance is still holding, I think the fact that yesterday here, Tuesday, we were able to consolidate and hold above that big push up from Monday, that tells me that probably dips are to be bought right now, but still very carefully, because we're in weekly resistance. You got to be careful buying any type of support on the daily when you're in a higher time period resistance level like you are now on the weekly. But right now, it looks like this weekly wants to try and punch up back to these highs. Got a beautiful extension trend line there. You got a lot of resistance up in there. So it looks like we're trying to get back up there, but let's wait and see. The cat's not out of the bag yet. We're not out of the woods entirely. But today, if I have a slight bias, it's definitely to the long side because of yesterday's price action. Go ahead and look at the Dow. You know, even the Dow and the Russell managed to recover off their lows yesterday. So you've got a pretty decent little buy pattern here on the Dow. You're in daily support. You're in some weekly support. Again, I'm just still a little bit nervous here with what we're seeing on the weekly chart and the monthly chart. But the Dow, you know, looks like it could catch up to the NASDAQ and the S&P today if those continue to catch a little bit of a bid. Let's go ahead and look at the Russell. Even though I am overall bearish on the Russell, today you might have a little bit of a strong support pattern like the Dow that might want to catch up to the NASDAQ and the S&P. We'll just have to wait and see. Can exercise caution with the indices until this price action works itself out. Let's go ahead and look at the 30-year Treasury bond. You can see, you know, this has been, you know, look at this week so far, you guys. I mean, this is just very tight range on bonds. I mean, this is, I'm very happy to have exercised patience up to this point in the week. We're at Wednesday, and to have taken a single trade. Literally, I haven't taken a single trade, not with you guys, not on my own accounts, nothing. I'm waiting for clarity. I don't just come out here on YouTube and, you know, spout nonsense. I'm actually telling you what I'm doing with my own trading, which is right now exercising caution, which I think is even though this is not financial advice, I think it's a good piece of, you know, guidance for you guys. Just, you don't need to, I know a lot of new traders or people who haven't been doing this very long, they tend to get anxious or antsy if they're not in a trade for a couple of days. You know, don't worry about it. Just relax. The trades always come. It's no big deal. You just wait, and eventually you get to a point in your trading career where you're content to wait. Waiting is, you know, probably the most important part of the game because it keeps your powder dry for when, you know, the time comes to push it a little bit harder, and it also keeps your you know, keeps your mind very balanced, just patiently waiting for those setups you know you have really good probabilities on. So that's what we're doing now, and I keep reiterating that because it's just super tight trading conditions here, so got to be careful. So the bonds, we're going for a little bit of a congestion entrance up here, move on the daily, but the weekly is still, you know, pretty bearish here. Again, we've got, you know, conflicting cross currents here on stocks and bonds. We'll look at the Ultra bond real quick. That was the 30-year. Same thing with the Ultra. So going to exercise caution across the board today, and if it ends up being another day with no trade, so be it. We've got CPI tomorrow. Something else big on Friday. I've got to check the calendar. But Thursday, Friday, we've got some pretty big market moving news coming out that hopefully will, you know, help this market pick a direction one way or the other. And then we'll be getting some good volatility and can, you know, get back to some good trading. But for now, just watching, patiently waiting, not in a hurry to make any mistakes. Gold again, just kind of leaking lower, but not giving a lot of clarity here, as we discussed yesterday. Let's look at silver. Silver is, you know, you've got, I don't know, it's tight. You've got a little bit of a daily support down in here, but the weekly and the monthly are not clear / bearish. So again, you know, we're seeing it across the board right now. Stocks, bonds, metals, nothing really looks very clear. Copper is heading lower on the daily, weekly trying to push lower, but you've got a pretty big down pattern yesterday on big volume, so you may see a bounce today on copper. Let's look at crude. We thought crude was going to bounce yesterday. It did ended up bouncing, you know, pretty decently here, but I'm surprised actually it couldn't get back up and through 72.50 up in here. So that was pretty shocking coming out of all this support. To be honest with you, I thought that this support here on the monthly and the weekly would be strong enough to drive this daily back to these highs. But the fact that crude can't even get back up to these highs, you know, with all the tension we've got in the Middle East, beautiful monthly support, weekly support, the fact that it's struggling here, I think needs to be a little bit concerning for people who are in favor of the long side with crude. So I'm still in favor, generally speaking, of the long side based on that monthly pattern, the weekly support. But, you know, it's not really performing very well right now. So again, you know, it's in this tight range too, right? You see, so crude, not easy trading. So if you have the foresight to be patient, which means that you're generally staying out of stupid trades during tough, tight, choppy conditions like we've seen the last few days, then that's great. That's a win. If you're not losing money right now, that is a win. So keep that in mind. You know, people, they kind of get stuck in this false binary that, you know, if I'm not making a lot of money, then I'm a loser, or I'm a terrible trader if I'm not making a lot of money. That's not true. The market goes through all kinds of different, conditions, market cycles, and you've got to know how to trade each one of them. And that includes knowing when not to trade. Sometimes it lasts for a couple of days. Sometimes you'll get stuck in this kind of crap for, a couple of weeks. And, the key is you got to be thankful when you can recognize it, because you're coming out of those 2 weeks of choppy, tight, difficult trading conditions, not having placed really a lot of trades. Your mental capital's intact. Your account balance is intact. You're ready to rock and roll on the next good, set of opportunities that come. Whereas a lot of people just get hammered during periods like this. And then when the good trading comes back, they've already lost all their money. And that's not a good position to be in. So, keep that in mind. Oh, hey, Steven, how you doing? Good morning. How's Utah? Is it sunny? We've got a pretty foggy day today. It's like one big cloud is just hanging down on us. If you just got here, I don't know when you got here, but I've been kind of going over the higher time period picture and, talking a little bit about how important it is to, be patient and let the good market come to us when the market is the way it's been for the last couple of days. So I hope that makes sense to you, because I know a lot of people, when they're kind of starting out, they think that we should be, just firing every day. It's just, unfortunately, it doesn't work that way. All right, let's go ahead and look at natural gas. So yeah, so that was why yesterday, Stephen, when I got back from the gym, I took a look at the charts, and even though the NASDAQ, had started to rally, it's still, it was overall a very choppy day. We'll look at it, and we'll look at the S&P again in more detail here in just a sec when I get done going through all the markets. That's when I got home from the gym and I looked at the charts, I thought, I'm not going to trade any of this. So that was the decision that I made. All right, here's natural gas. Got a pretty nice resistance pattern here on natural gas today. A lot of resistance up in here. Big volume. So natural gas, going to keep an eye on today. Maybe if we get any pops, might be a good opportunity to short. The weekly could be better. This is a little bit of a strange weekly price action going on here, but the daily has a decent pattern, and we're in some pretty strong monthly resistance. We'll keep an eye on natural gas. Let's look at the Euro US dollar futures. Again, I mean, look at this. I know I sound like a broken record. You got to forgive me, but the reason I sound like a broken record is because I'm constantly reminding myself, no matter how many years you've been doing this, FOMO can always creep in. When you haven't taken a trade for a couple of days, you'll find that your mind starts to, it'll try to find trades where there aren't any. So by repeating it to myself and repeating it to you guys, I just remind myself and remind you that it's okay to just not get caught up in this, really tough, tight, choppy market conditions. So you can see here on the euro, it's the same thing. You've got, just look at this. I mean, it's incredible. Look at these closes. Oh, even back here. Basically, the last 6 days of closes are right nailed at this 109.70 level. Pretty amazing. Let's go ahead now and look at the pound. Going to be pretty similar. Get a little bit of a support pattern here on the daily pound. The weekly doesn't look too bad either. So, the pound from the long side. Pound from the long side could be interesting today. That's not a bad little setup there. That's good. We'll look at the rest of the currencies and the agriculturals and the meats and the crypto. We'll look at that a little bit. Well, we'll look at Bitcoin. I heard something weird happened on Bitcoin overnight. Yeah. This is why it's good to be careful, right? Yesterday everybody thought Bitcoin was breaking out and going to the moon, and here we are back inside the range. So imagine how many people bought the break of that high right there on close and then, you know, just left holding the bag. That's why it's such an advantage when you can see, you know, when not to trade. You know, it's super important. Yeah, good. I'm glad it helps keep you out of FOMO, because it's super important. And it's one of these things, you know, where I think that's one of the biggest traps that all traders, you know, regardless of your experience level. I mean, when you have more experience, you've made the mistake of FOMO, you know, more than people who are new at it. So, you know, you've been punched in the face a lot more. And so you've learned, hopefully, not to get trapped into the FOMO. And but we all still feel it, right? Because it's especially, you know, trading, when you do it for a living, it's not a linear, you know, type of situation where you come to the screen every day and you think, well, you know, I should make $1,000 or $2,000 today, or, you know, whatever the case may be. It's like, no, it doesn't work that way. You know, if you sometimes you can go a week without making anything because you're not taking any trades, but that's great because you're not losing money. You're staying out of bad trades. And then if you do that and the next week gives you many good opportunities, you know, you can make 5 or 10 grand that week. It's like, okay, so it's not linear. It goes like this, and hopefully it stays flat and then goes big up. You know, that's kind of the name of the game. All right, so let's go ahead and do our check. Gotta crack the neck here. I've been working on the computer all morning, doing some other stuff. Looking at the hourly, so let's flop over to the hourly chart here. Now that we have a little bit of the lay of the land, Steven, if you hear me getting ready to pull the trigger on a bad trade, just remind me that we shouldn't get FOMO today. It'll be perfect. We can work as a team. That's what it's all about. I got a lot on my mind, so I can make mistakes too. So good to have people in the chat help us out and remind us of my own advice. That's usually good to start the day. And then as the day wears on, the patience wear thin. You start seeing trades that maybe aren't there. So it's good that we stay out of this stuff. All right. By the way, how's the setup, you know, with where the webcam is and just the overall layout? Is that a little bit better? You can see the screens more clearly. Let me know. I kind of played around with that last night. I think I don't know, it looks all right on my end, and it looks clean and clear. And yeah, so let me know how it's coming across on your end. All right. So 7:48 a.m. Eastern. We'll quickly go over the indices here, even though, you know, we're going to be careful, but I'm not against playing them from the long side potentially. You know, the moment you play these from the long side, that weekly resistance I'm talking about starts slamming down. So we're still going to be very, very careful. Right now, what I can say is heading into 8 a.m. Eastern here, this is not any type of an hourly bar that I want to participate in. It's an inside bar, no pattern. You know, we got to wait and see what these markets want to give us. It'll be the same likely for the NASDAQ. Yeah, NASDAQ just kind of leaking lower. We'll let these do what they want to do. The Dow and the Russell, like I said, you know, you could have some support in here. This is certainly not a support pattern, so we won't trade the Dow at 8 a.m. Let's look at the Russell. Same for the Russell. You have a decent daily support pattern, but this is not a support pattern on the hourly, so we'll wait. We'll go over bonds here. I'm just reading your comments here. Okay, good. I'm glad. That's good that you stayed out of that, because yeah, you can see how, okay, good. I'm glad the camera looks good. Yeah, that was the thing, you know, with ES, right? Remember yesterday we were talking about, I'll just quickly go look at ES. You know, we were talking about, because I actually thought about you, Steven, when I was falling asleep last night, and I thought, gosh, I wonder if he took that short. And I was hoping you didn't, obviously. I'm really happy to hear that you didn't. But here, this is the ES from yesterday, right? So my key level from yesterday, remember, was 47.80, right in there, support, right? So remember, we started getting down under that level a little bit, but it was right around here I started to get concerned. I didn't like what I was seeing. I didn't think we were going to continue to the downside, obviously, which is why I didn't, you know, short the retest of that support. And then, yeah, right after that, just boom, you know, right up in here. And it ended up going, I was watching this heading into the close here. And at that point, we were in resistance, and I was debating shorting, but I still looked at all the higher time period, and I just said, no, I'm not going to short this. I'm glad to hear you didn't short it. That's good news. And you know, it's always, when you're trading the hard right edge, right, when you don't know what's going to happen next, that's what makes trading so much fun, right, and challenging, because you you're trading the market live as it's unfolding. You're not looking back, retroactively saying to yourself, oh, well, of course, yesterday I should have gotten long here. And then, yeah, right there, short, So when we're doing this live in real time, you can look back at yesterday or the last, couple of days, go, well, yeah, just wait. And as the lows are put in, buy the dips. I mean, no. I think these are, I don't know how other people are doing out there in trader world, but these last couple of days have been, challenging. So I think if you're standing by patiently waiting for this to resolve itself, and you have the wherewithal and the foresight to know not to trade these markets, then you're ahead of the game just by, doing that. So that's really important. And I'm really glad to hear you didn't take that short. All right, let's go ahead and look at where did we leave off? Bonds. Let's look at the bonds and bonds weren't this is how yesterday, we put together the whole picture with all the different markets, right? We're looking at the stocks, the bonds, gold. So the dollar, right? You could see how throughout the day yesterday, by looking at all the different pieces to the puzzle, that's also was what wasn't giving clarity, right? So you see how much kind of goes into when you have a sense of, the key levels and what's going on, but then also the intermarket correlations. It can really give you a heads up on the days to put the pedal to the metal, and then, conversely on the days to, be patient and not do anything. So yesterday, bonds, metal, dollar, they were all giving, messy signals. And today, they're pretty much all doing the same thing. So it tells us, again, it's a day that we got to exercise caution. Not the most fun days, but I'll tell you, when you exercise patience, it's really important because you're teaching your brain, you're rewiring, those synapses in your brain, the ability for your brain to send messages back and forth. So, people think that by sitting and watching the charts and having patience and not do anything, they think, oh, this is a waste of time. No. Number one, you're saving money, you're saving frustration. And you're teaching your brain, you're forming those neural pathways of patience, which is going to benefit you hugely in the long run, not only in life, but in trading. So it's massive. It's good practice to stand and watch and wait and be patient. And that's also how you get into the flow of the market. So when things open up and get clear again, you're right there to pounce when it's ready. So, but patience is a really good thing. I hope that makes sense. I don't hear a lot of people talking about that, but I guess it takes quite a long time to, kind of start really understanding and appreciating the ability to develop patience. All right, so here's the 30-year bond, again, stuck in the middle of the range here. Daily is doing the same thing. The daily's trying to round the bend up here, but the weekly's still pushing down. So it's kind of a similar story on bonds as you're seeing in stocks. Gold and silver are also telling that story. Look at the ultra bond, it's kind of the same thing, right in the middle of the volume profile of the daily range. Gold is also a mess. We may have to wait until CPI tomorrow. I think CPI tomorrow, Stephen, will be good. I'm looking forward to it. Certainly there'll be some good volatility, and it'll hopefully, shake these markets out of their slumber. Because today it's looking very, very just kind of much the same as yesterday. But we'll give it a chance. I'll be here for a little bit. We'll see if we can get some stuff going. Here is silver. Also not giving us a whole lot. There's copper. Nope. Let's look at platinum. That would have been my only trade this week, that darn platinum trade that I missed the other day. But nothing today on platinum. Crude. I don't want to take anything there. I don't have time to explain why I don't want to take certain things, but it's a combination of everything that I'm seeing, kind of like I explained the other day. Let's look at the pound, because the pound daily chart could be bullish, potentially. But it's not really giving us any kind of a bullish pattern here, and plus we're at the value area high, so that's not a place to get long right now. I will get long at or above the value area high or at or below the value area low when I see, a really good trend intact. But you got to remember, you know, those days are rare, especially in the indices. You know, ES, NQ, Dow, Russell, they truly trend about, I think it's something like 15% of the time. So, you know, 4 times out of 5, you have to assume that they're going to, you know, revert back to the mean at some point, which is why I'm careful taking trades in the direction of the value area, if that makes sense. All right, so corn is, I don't really trade. I'm not interested in trading corn until that 9:30 open, the reopen. We can, well, we looked at corn yesterday. They were kind of, so you do have an interesting resistance pattern here, certainly, on the daily for corn. So you got a little pop yesterday, and now we're just trending down. This is kind of the pop we're interested in shorting with corn. So if we get, you know, today, for example, after the reopen at 9:30 a.m., sometimes you'll see something like this, right? Because, you know, corn gets crazy. I don't know if you've ever seen it, but at 9:30, you know, sometimes you'll just see like these huge moves like this. Now, if we were to get one of those up into that resistance level at, you know, 460, maybe take out some stop. Those are the ones I'm interested in shorting, because then you're popping up into your nice daily resistance level, and everything's heading down. So those are the nice trades. Those are kind of the gimmies. I don't know if you play golf, but you know, when you're putting the ball and you've got about a 2-inch putt, it's a gimme. And I want to try and wait for the trades that you think are a gimme. Nothing is really a gimme, but you know, if you wait, the really, really good ones come. So that's corn. Look at wheat. Wheat's not quite trending the same way as corn. Soybeans, pull back. Nothing for the 8 o'clock hour. Let's look at Bitcoin. So Bitcoin continuing to drop. Hopefully Ez didn't get stuck in this. Ez, if you show up, please tell me that you're not stuck long Bitcoin at 46 or 47,000. That would not be fun. Let's look at Ethereum. You just never know. Certain days, you know, you have good opportunities to trade different markets. All right, so there's really nothing I'm interested in here. Let's go. The only one of even moderate interest right now is maybe the pound, but it would have to pull back quite a bit, so not really there yet. All right, look, we're doing our job. We're here. We came in time. We prepared for the 8 a.m. check, and I will not. The most important thing for me, Stephen, is to not look back at these charts at 8:30. You know, look back at the 8 a.m. close and go, "Oh my goodness, why didn't I take, you know, such and such a trade?" That's what I want to avoid, and that's what we do avoid by making sure we're here on time and doing the check and prep before the 8 a.m. hourly close. And we're going to get that close here in about a minute. All right, so here's ES. I don't really need to talk much more about this. Do you have any questions about anything? Your own personal trading, psychology questions, you know, whatever. Anything you want to know? Water. Oh, I did back yesterday at the gym, so my neck is pretty sore. Good. Thanks for the like. Even, you know, I'm going to give away a free course when we hit our viewer goals. And I guess it's safe to say, if we don't hit that viewer goal in 20 days and you're here and you gave a like each day, I guess the prize has to go to you. So I'll keep that in mind. I'm happy to give away copies of the course because it's a really good course. I put a lot of time and effort into it, and it's not like any of this other stuff you see out there on YouTube. And a lot of it comes from just different concepts that I learned from my mentor that I've just kind of made my own and different mathematical formulas, and it's everything that I use here. But the course is kind of a structured way to understand, Owings market analysis and how I use it. And I find it's funny too, because people want, like, everybody that I come across, the natural instinct is to want something like solid or concrete, if A, then B every time. I mean, obviously, oh, cool. Yeah, it's, we'll see. I mean, I'd like to do a drawing, but appreciate you being here, and we'll make sure you can learn, I promise. And I'll probably get you a copy of the course at some point. I'm just also setting up the infrastructure, because you got to log in, and it's all like video lectures and all that kind of stuff. So, but good to hear you're interested. But yeah, people want, like this, if A, then B. It doesn't work that way, right? Because trading is very complex. I mean, just imagine, I don't think people really think about the full scope of the world's financial markets, right? Just think about how big the financial markets are. I mean, they're massive, right? And you got this interplay between, I mean, think about the underlying economy, right? That the real economy that's underneath this financialization, of the stock market, the bond market, right? Because that's the financial economy, which in some ways is connected to the real economy, but not entirely, right? But just imagine all the real goods and services that underlie all this stuff. And then we're sitting here using technical analysis, which is very effective if you use the right kind of technical analysis. And we're trying to, speculate and figure out what's going to happen next and what to buy and what to sell. I mean, when you really think about how complex that really is, obviously it's something that's going to require, a lot of thought, a lot of planning. You've got to know a little bit about the intermarket correlations. I mean, there's a lot to know, right? So when I come across people, they're like, no, I just want, when the 4 EMA crosses the 8 EMA and you're with MACD, you buy. It's like, it doesn't work that way. Like, but I think it boils down to human nature, our instincts. It's not a bad thing. It's just the way we're built. We want to take the easiest way, right? It's a caloric thing. So I guess back to our days of, having to, forage for our calories, we were always looking for the shortcuts, right? So I think that primitive part of our mind transfers over to a lot of things we do in our normal daily lives, and, trading notwithstanding. So people want the shortcut to trading, but that's the thing. There is no shortcut to trading. I mean, it's very complex. And that's also why it's important for people to have realistic expectations in terms of, what it takes to get good at it and consistently good at it. And the reason you can make the kind of money you can make once you get good at it is because it's so complicated, right? So I think YouTube has been kind of like a blessing and a curse for the trading community. I mean, I think it's fun because I enjoy, it kind of keeps me sharp when I'm helping other people. So that's why I do it. Like, it gets a little boring just trading by yourself in your own house, right? So for me, it's kind of an entertainment aspect, and I can add some value and interact with people. So as someone who's been doing this for a long time, I think it's fun. But for people who are just, kind of getting their wings under them with YouTube, I mean, there is some good stuff out there for sure, but there's also just, I think there's a lot of unrealistic expectations. And I think it's really good to stay grounded and kind of realize, like, when we're trading, what we're actually dealing with and what we're competing against. And that's why, there's no magic formula. There's one secret. It's called hard work. And you gotta have something that works and time tested and all that kind of stuff. And yeah, I mean, I was lucky because I ran into the right mentor, which all my Owings market analysis stuff is based on. I'm kind of like building on the shoulders of giants. I mean, my mentor was one of the best traders of the 20th century, right? So, I mean, that was luck. But then also all the hard work and effort that it took to really understand how his brain was working and learn his stuff and then create my own stuff. I mean, there's no shortcuts, So I find that interesting. Reading through the chat here, said I've gone through that. Oh, chasing indicators. Yeah, exactly. Oh, you got some questions here. I'll answer your value areas question here in just a sec. Yeah, chasing indicators. Exactly. How long have you been doing it again, Stephen? Did you say like 2 years? And you're working with price action. So um, does that mean, Al Brooks type stuff, Tom Hugard, this kind of stuff? Tom Hugard's awesome. He's a Danish trader. I text with him sometimes on Telegram. We've got a similar sense of humor. We're not friends or anything, but a couple of private messages. He's a really nice guy and a very successful trader. One of the real deals out here. And I've learned a lot from him. He's kind of helped me take my own trading, to the next level in terms of, I'm trying to size up now in my own trading. And Tom is, he trades big size, so he's a good guy to learn from, especially about the psychology. Since last April. Oh, cool. Al Brooks. Yeah. Yeah. I know a little bit about Al Brooks. I mean, he seems like a nice guy, and his price action stuff, I never studied it. I mean, I've looked at it, but obviously I have my OMA, which I think is way better. But this stuff, it's just a different way of looking at it, right? Like, I was lucky because by the way, I don't use the name of my mentor or where I learned all this because, legally, you could technically get sued for it's called a likeness law. So I'm just very careful about not mentioning anybody's name, because then they can say, oh, well, you're trying to use my name for marketing. It's like, no, I'm not. So that's why I don't use the guy's name. But yeah, it's a very different way of looking at the markets as compared to, let's say, price action from Al Brooks. I think, from what I've seen with the price action, it looks, I don't know, it looks a little unstructured to me. I don't know how, it seems like it'd be hard to know when to make decisions and when not to make decisions. But you tell me, you probably know more about Al Brooks and price action than I do. I mean, some people use it effectively, I'm sure, but the little bit I've seen about it, it looks very difficult to know when to trade and when not to trade. Like, the roadmap doesn't look super clear to me. But again, I'm not an expert in that, so I take that with a grain of salt. Gone through a lot. Yeah, SMB is. I mean, they're the real deal. Obviously, they've got good videos, and I like Mike Bellafiore. His book, One Good Trade, I think it's called, or The Playbook, or maybe those both of his books. Those are good books. I've read through chunks of those. But yeah, SMB seems great, and I think that's also like one of the key things that SMB shows us is that it's much easier to get good at trading with good mentorship, with like real mentorship, right? Whereas that's why the guys who qualify to go and trade at SMB and who want to trade in that environment, they have a much better chance at doing well because there's somebody there guiding them, helping them every single day, right? Kind of like, this is my reason for the YouTube channel, because by helping you guys, I also have to, help myself. And by teaching, you actually get better at doing. Because some people say like, oh, well, those who can't teach and, those who can don't teach. I think all that's like, BS. Like, if you can do something and you can teach it, it just makes your ability to do it for yourself even better, because you're constantly, going over the concepts in your own mind again and again while you're teaching them. So it's reinforcing everything. And so back to SMB, that's where I think, that's why they have a lot of success there, because they've got that really good mentorship program, in place. I think it'd be really cool here after a while when you guys start to really understand how I'm using my, OMA. I think it's going to be cool to see if you guys are able to trade with it and see the power of it and make money with it, and almost turn this. I want to eventually turn this channel. It'll take some time, right? It takes a long time to grow channels. You gotta. Right now, nobody even sees the videos, right? So people don't know, what they're missing. But once we grow the channel, I would love it to be like a place where like-minded traders, I'm calling things out, but then people are also in the chat with their own set of OMA charts, and they're saying to me, hey, did you see this situation right now over on platinum or corn? And then I flop. Oh, it can be a group effort where, sure, I'm kind of pointing things out to everybody, but other people can also call out good opportunities that maybe I'm missing, right? Because I'm just one guy We can have like a mini SMB here on YouTube, which I think is really cool. Let's see. You're right on Al Brooks. It takes a lot of practice before you can get this. Yeah, exactly. I mean, and I can respect that, right? Like anything takes a lot of practice, whether it's my stuff or if it's Al Brooks or so. Yeah, anything worth anything takes a lot of practice. That's for sure. You know, I think, you know, to me, technical analysis comes down to having a roadmap, right? So in the most simple way I can explain, you know, what I do with my technical analysis here is that all of this is just a roadmap. So, you know, I've got my envelope here in green. That's my envelope top, envelope bottom, middle of the envelope here, you know, near high, near low in blue. You've got all these dots all over the place. This on the daily chart, and then, you know, how I'm connecting it to the weekly chart, the monthly chart, you know, I use my quarterly, my yearly, all this stuff. It's just providing a roadmap for me on, you know, where price is going, and then just giving me really good spots on where I might want to speculate. So that's kind of how I view technical analysis. It's got to give you a good roadmap. If it doesn't give you a good roadmap, then it's going to be hard to use, because even if it's good technical analysis, if it's hard to know when to pull the trigger and when not to pull the trigger, you know, that becomes pretty difficult. Let's see, the value areas. I've heard others talk about it. Oh, okay. Yeah, I can go over that real quick. And I don't know if did you see those videos on my channel that I did on volume profile? Because those also will teach you a lot about the volume profile, because I do use the volume profile, but really I use it as a confirmation for what I'm seeing on OMA, because although you could trade with the volume profile all by itself, I do think that it's most powerful if you have some sort of a technical edge like we do here, and then you plug that, when you see your edge, you plug that into volume profile. That's how I like to use it. So the value area, here you can see, you see all this light gray here. This is the light gray. This is volume by price, right? This is the amount of volume traded at each price for ES. And then when it turns green in here, this is called the value area. And then you've got some more gray volume down here. So the value area is just, it's where 70% of the daily volume has been traded, right? So it tells you the most heavily traded zone of the day. So it's important because when you get outside the value area, it has different implications under different market conditions, but it just lets you know where you are in relation to where the most heavily traded volume is. Then you'll have the point of control in orange. That's the most heavily traded price of the day. That's always in the value area, but sometimes it'll be toward the top of the value area. Sometimes it'll be down here. So all these things mean different things. And yeah, check those volume profile videos, because they really do go into a lot of different examples in terms of, because that's another thing with volume profile, right? People want, you know, because I read people's comments, and what they want is, you know, if A, then B. You know, if there's a low volume node on the volume profile, then I should do this. Or if there's a high volume node, I should do this. And I'm trying to get the point across that it doesn't work that way. The volume, just like all technical analysis, the volume profile is no different. It's shifting throughout the day, right? So you have to be able to be aware of how it's shifting and how that relates to the different type of trading that you're doing. I mean, it's intricate, right? It's not just a one size fits all, but it does. Like one way that I like to use the value area is like, if I'm going to take an exhaust, I love exhausts, and for me an exhaust is a reversal. So that would be an example on ES this morning during London. You pop up there and then you get a reversal back down the other way. I love taking these trades. So for me, if I have all my other reasons, let's say to short that right there, then I would also be very aware of the fact that we're at the upper range of volume for the day. We're in the, you know, we're outside the value area, which means if this exhaust is valid, we're going to want to revert back into the value area, because price is going to go back to where all the contracts have, you know, change hands throughout the day. It kind of, all the volume, especially the point of control, right? It acts like a magnet for price. So a valid exhaust here for a reversal back down is, you know, if you know where you want to take this trade, that's really important. And you want to take it when you're way outside the value area high, right? So that's one context. Now, if you're in congestion, right? Like go through congested. This is, I'll just stay on ES here because it's, you know, good heavily traded market. Been crazy here. Wicked moves. So what it comes down to here, like, and look, this is just going to give you a basic idea, because this volume profile at the end of the day, like I talk about in my videos that I do on volume profile, it's kind of meaningless because this is how the volume profile ended at the day. But what's most important is how it's developing during the day as all this is being traded, right? So, I mean, what you can see here is as this starts to trend lower, right, down in here, you'll see the value area shifting. So you'll see more and more volume coming in. And then when you see the value area stop shifting lower, sometimes the value area will then even shift higher. And then, you know, you'll know that there's not a lot of volume being transacted down here, which tells you that that trend is probably over. And that's a spot, you know, you can start looking to get long. So there's lots of different ways to use it. If you're in a congested market, that's the point I was going to make, was, you know, you'll be generally inside the value area. So then you just want to wait for setups, you know, at the outer bounds of the volume, at the value area. Here's a good example. Here, this is by the end of the day. So by the end of the day here, this was January 5th. This was last week. So by the end of the day, this is your 1, 2 o'clock in the afternoon. Usually I'm not trading at this time, but you can see by the end of the day, the volume profile here, there's your value area high, there's your value area low, your point of control is kind of here in the middle. And you can see, you know, I had a big move up, big move back down. And now you're just re-challenging this here. So you're in congestion, you're at the value area high. That's a good spot to, you know, go short for a move back down here. And then down here, you know, you're in congestion, you're in support, you're near the value area low. That's a good spot to go long. So you can use these different areas as a clue to tip off the type of trading that you're in. Does that make sense? Help you structure your trades. All right. Let me know if you got any more questions. Makes sense. Okay, cool. I'm glad it makes sense. That means it's nice. It's good for me to be able to explain it, especially when I have my drawing tools and I've got the video and everything, like to be able to diagram it all out. I mean, it's super helpful when you're teaching a concept to be able to diagram it out for somebody. All right. Let me know if you got any more questions. Did I miss anything? I think we covered them all, but if you got more, fire away. We'll just take a quick look here. Looking at 30-year. I mean, you can see, right? Like, I don't use price action, but what do the charts look like on your price action charts? Does it just look, do you see now how when I'm explaining everything from my point of view, and then you look back at your charts and yeah, maybe right now is a good time to just not be losing money. Does it look like that? Trend days. Trend, well, the thing is on Monday, yeah, for ES, okay, so here. So basically that's what I got to understand. ES, you like ES, right? Is that your favorite market? And if it is your favorite market, you know, why is it your favorite market? Is it just your favorite because it's the most liquid, and even though it's volatile, it's still kind of stable because, you know, it's so liquid? Or do you have any special reason why you like ES? I'm not saying you shouldn't or anything. I'm just trying to, if I get a better understanding of, you know, the kind of person you are, what you like to trade, why you like to trade it, kind of influences how I can answer your questions the most effectively. And then I'll talk about how to trade ES on trend days, at least from my perspective. But even the most important thing too to realize is that ES and NQ, you know, they truly trend less than 20% of the time, right? So by default, they're just not going to be truly trending that much of the time. They go through periods where they will, but the actual average is about 20% or less of the time. And, you know, on Monday, I'm just going to read your, on Monday, I didn't trade, you know, I didn't participate. I think you were here Monday, right? I don't remember. Because we're Wednesday today. On Monday, I didn't participate in this trend to the upside because I didn't really, you know, I was waiting for clarity on what was going to happen. I was still looking to play the short side. You know, I didn't, but that's what I was interested in coming into the day. And then when I started to see it squeeze like that, you know, I didn't know how far it was going to go. So for me to trade a trend day, I need to, number one, I need to have the like conceptual understanding of, you know, why the market's trending, right? Like I want to see the weekly chart, the daily chart. I want to see agreement between all my different time periods that, yeah, this trend makes sense. I'm in the direction with the higher time period charts, the weekly chart, the monthly chart, the daily chart. That gives me a lot of confidence that if I'm trading a trend on the hourly, that I have a good opportunity of, you know, getting good follow through if I buy a pullback or sell a pullback. So that's number one, what I look for. So for example, on Monday, and I'll show you how I would actually trade it too, but I'm just telling you why I didn't participate in the trend on Monday to the upside was because right now, like I keep talking about, my charts they're not in harmony. That the daily and the weekly chart are fighting right now. And I don't like to take trades when I can see that that's happening because those are the most dangerous times to trade. That's what I've learned, right? But let's just pretend for the sake of argument that, you know, on Monday, I had every reason to believe this was going to pop. Let's say I came into the day because the weekly and the monthly looked like, you know, they really wanted to go up. And so I was expecting this big move up on ES, right? Which sometimes that does happen. And if there's nothing more powerful for your confidence and to have a big positive day when you come into the day really expecting something because you prepped, you've planned, you've done your analysis, you really expect, let's say, the ES to go up, and then you start to see evidence that what you expected starts to happen. I mean, those can be monster days. Those are the kind of trends I look for, but they don't happen very often. Like that huge day up we had on Monday doesn't happen, you know, that often. But how I would trade that, here, I'll just take you back to that here. I think, was this Monday? Yeah, this was Monday. Okay. Yeah, so like just according to my methodology, if I think that the market is going to start trending to the upside, especially on the hourly chart, you know, I'll just wait for a pullback. So with my methodology right here, you've got a pullback, you're in a trend, because I have definitions, right, for when we're trending, when we're in congestion. So right now, as of that close, you're meeting the definition of a trend to the upside. Let's just say all other things being equal. If I saw this pulling back, you know, you see how we close above that true average, close above the envelope top, right? You see how you have 3 closes in a row, 1, 2, 3. All of these are above the envelope top. This is telling you that this trend for now is strong and intact. And all these little clues that I'm getting from my technical indicators are telling me that that pullback right there to the live middle of the moving average envelope, that's a good spot to try and buy that pullback in the trend. You've got a good risk to reward there because the stop is going to go below this near low here, this blue line, you know, 47.32 right there. And let's say you just buy it right up here around market at 47.35, let's say, right? So you've only got 3 points of risk on this pullback, and then you don't put a target. If you're in a true trend day, you should see something like this. And so then if I saw that, and you'll see this as we live trade together, there will be days where we catch these, and there will be days where we're in one of these trades, and I'm in, you know, the trade on my live account, and I'm telling you, hey, you know, I'm long here, my stop is here. And then as this starts to go our direction, especially on the day where you can see all the higher time periods lining up, and you like, you know, you expect it to be going this direction, you've got that context, then what I would look for as well is I would immediately start projecting my extension trend line, that pink dot right there. You see how we get a close over that? And not only over that one, you get a close over both of those. Those should have been resistance. They weren't. They broke, right? So where do I trail my stop? I move it behind the true average right here. So I'd move my stop from, you know, 47.35 up to 47.45. You know, lock in 10 points of profit and then just give this thing a chance to keep going. And if I knew, if I had a pretty good idea that we are in one of these, you know, monster squeeze days or monster trend days, which again, don't come along very often, but when they do, and when you recognize them, I wait for the pullbacks like this. I just went into the reasons, you know, why I would take that pullback. And then once I'm where I'd put my stop, and then once I'm in the trade, you know, for me, this thing's going to keep, either I'll have a higher time period target somewhere, or I'll just wait till I get a close below the true average, right? Or below the near low. So do you see how all these closes here just are outside the envelope top? We're flying. I mean, this is a monster trend. You're just flying. Even here, you break the extension again there. It wasn't until you got up here. Do you see how you start moving inside the envelope underneath these true averages? That's when, you know, you start saying, okay, well, there's some resistance there. I'll get out, right? So that's how I would ideally trade that type of a strong trend. The key is to recognize them when they're happening, and usually to do that, I have to have a pretty good understanding of what the higher time period charts are doing. Does that make sense? Hope it does. I think it's my favorite, but not sure yet. NQ is more, yeah, exactly. And I mean, that's why I trade them all, right? Because they're all different and they all give, it's actually pretty rare that what we're seeing right now, all the markets are just kind of stuck not doing much. Well, at least the major markets, right? I'm sure there's some movement over on corn and some other things we can maybe find today. But this is why I like trading them all, because, you know, you have more to choose from. So if you know what you're looking for, you can really wait for good opportunities, and you have, you know, a lot more variety. Because in the end, as long as the market's liquid, you know, like my technical analysis, you know, the patterns and, you know, my rules and all that kind of stuff, or I shouldn't say rules, but like my overall framework, it goes over to really any market. Well, it does. I was gonna say not really any market. No, really every market. What happens when you stand here talking all morning? All right, it's 8:28. I don't believe we have any news this morning, right? I think we're waiting for CPI tomorrow. Double check here the calendar. Yeah, I always check the calendar multiple times before each day, but you know, sometimes it's good, sometimes you miss things. No, today there's really nothing on the docket. Well, we do have the crude oil inventories number coming out at 10:30, so that could move crude oil. So that's interesting. Let's keep that in mind. Crude oil inventory at 10:30. And oh, we've got the 10-year note auction. That, you know, that's going to be big for the Treasury market. That's at 1 p.m. And then I think tomorrow we have the 30-year auction, which is going to be big for the Treasury market, which is big for, you know, the stock market. So we've got a lot coming the next couple of days with CPI, the 30-year Treasury auction. But today we've got the crude oil number 10:30, and we've got the 10-year note Treasury auction at 1 p.m. That'll be interesting. Yeah, the envelope is just yeah, I don't call it the Owings band, but you can call it that. It's just it kind of frames, it just kind of like my map framing price. So it by using the envelope, I just know where I am. Would the Bollinger Band be something I could use since I don't have the envelope? No, the Bollinger Band is way different, I'll show you. I'll put it on there for you. Hang on. My envelope's not really like anything you're going to see out there, but I'll show you the Bollinger Band. What charting platform do you use, Stephen? Oh, you use TradingView. Okay. I don't have my indicators for TradingView yet, but I can look into how I would do that. Then I can try and get you my envelopes so you can follow along. But you see how the Bollinger Bands are way different? You see the Bollinger Bands are here. So here's the upper band. Here's the lower band. Right. So it's the Bollinger Band is just constructed in a totally different way. Oh, you trade on NinjaTrader? Okay, cool. Let me see. I'm gonna get this off here. Yeah, I've got my formula for I've got all my indicators coded for Sierra charts and for TradeStation, but not for TradingView. But I'll look into that. I'll check into what coding language they use. Yeah, I learned this envelope from my mentor, and then I just have slightly different mathematical calculations that I think make it a little better. So it's, in that sense, it is the Owings band. But I just call it, to keep it simple, I just call it the envelope top, envelope bottom, and middle of the envelope. Oh, you have TradeStation. Okay, cool. Yeah, I can, if you get your, I mean, TradeStation, I'm not nuts about it. I have my TradeStation. That's why I switched to Sierra chart, because it's just, sorry, I'm just stretching my legs. I switched to Sierra chart because I just like it so much better. But I can, I'll figure out how to get my indicators over in TradingView. Do a quick search. So they use something called Pine Script, I guess. If you know, do you know anything about TradingView's scripting language? To me, it looks like they use something called Pine Script. I'll see what Pine Script is. And Stephen, do you do anything else, or are you just working on your trading, or do you do it before work? Because I guess it's pretty early out there for you, right? So technically, in that time zone, you could trade and work, which is good. I'm lucky with the Swedish time zone, or the Central European time zone, that at least I don't have to wake up early, which I don't like. Even if this is my only job, I still don't want to wake up early. Well, it's not my only job because I've got a 4-year-old too. She's more than a full-time job. Oh. I can see the delay is not that bad. So it's 8:36 a.m. You see how these markets are just sitting here doing nothing. Pine script, pretty easy. Okay, cool. Yeah, I'll figure that out because I know a lot of people do use TradingView nowadays. So, you know, I'll have to get my indicators programmed over there because when people start taking the course, they're going to want to be able to use the charts. You know, they're not going to want to have to go to TradeStation or Sierra charts only. So I think TradingView is another good one to have. Oh, that's cool. You do it before work. Nice. Yeah, that's good. That takes dedication to get up and do it before work. Good on you. You must have to get to bed, you know, pretty early, huh? Just flipping through here, Mr. Russell. Okay, that's good. Yeah, because I would want to make them, you know, locked. Kind of how you do it on TradeStation. You can lock the ELD, and I believe on Sierra charts you can do that as well. But that's good to know. Yeah, I'm not a huge programmer myself. I just kind of, my best friend's a really good programmer, so when I need help, he gives me some help. But I man, TradeStation I'm okay at, but that's because I have a lot of experience with it, and it's pretty easy. Language is pretty easy. But Sierra charts is C++. So I already pretty much, it's probably not hard to convert it from C++ into Pine script. Just reading your chat. Yeah, I gotta think if I'm still thinking through, because the way that I've set up, you know, when I trained under my mentor, you know, that was a long time ago. When was that? That was 2007. And then I trained with him 2007, 8, 9, 10, 11. You know, so a long time ago. But I think, you know, it was just a different situation back there. Back during that time, I think, you know, at that time for his stuff, I probably ended up paying overall, I want to say maybe 10, 15 grand. You know, stuff wasn't cheap for indicators and course material and all that kind of stuff. So I'm not going to charge anywhere near that. But I'm still trying to think, you know, if and when I do go public with the course and everything, then I got to think of like a fair pricing structure so it's accessible to people. And then also, like, do I want to have the indicators separate or as a part of, you know, because I also split the course up into different parts, right? So it's 25 lessons, and the first 5 lessons are just basically foundational. I'm just kind of telling you what you're going to learn and a little bit of the background of OMA and how I developed it and all that kind of stuff. And we start to get into some of the nitty gritty at the end of the first 5 lessons. And then the second 10 lessons are the pro section of the course. And that we start to get into some really heavy duty stuff. And then the final 10 lessons are called Elite. And those are really advanced concepts where, you know, we're tying everything together. And so I have to figure out how you know, if I want to offer it as just a course or, you know, putting, you know, if people want to start with just the pro or, you know, whatever. Yeah. Subscription access. Yeah. It's good because there's so many different ways now that like you can make, as a developer, you can make your product available in so many different ways. So yeah, subscriptions are definitely a good way too. So yeah, I'm just thinking through that. One thing I am going to do with my course is I'm going to do something that I've never seen anybody else do with, at least out here on YouTube. I'm sure somebody's doing it somewhere, but I haven't seen it. I'm going to do once I have the infrastructure set up and decide fully to like, okay, I want to do this now and go out with it. I'm not there yet, but I'm kind of leaning in that direction. I'm going to do a full money back guarantee, right? So I've seen like other people out there, like, I don't know, a lot of these courses, they just look scammy and they charge ridiculous amounts of money. You know, people are charging $5,000 for a course. I mean, that's, you know, I paid 10 grand for all my stuff way back in the day, but I had access to, you know, a super famous trader for that, right? And now you see guys on YouTube who are charging like $5,000 for their candlestick course. You know, I think that's like super excessive. So I'm going to charge way less than that, but I'm also going to do like a, you know, let's say like a 7-day money back guarantee. So someone that buys the course, they can go into the members area and, you know, click around and watch some of the lessons and have access to the whole course. Like it's designed to be taken, you know, from 1 to 25, right? And part of with my course, I want to actually help people who are taking the course. Like I want to interact with people and mentor and teach. And it's not just like, oh, here's a course, good luck. You know, like I actually want people to succeed. So, but I think it's like a 1 week money back guarantee. So someone has plenty of time to go in, look at it. So you see what you just paid for, which in the first place is not going to be excessive. And then once you paid for it and you go in, you check it out. If you get a good vibe and you like it and it's making sense to you and you feel like you get good value, then you stay, right? But if you don't like it and you want a refund, then I'll just refund the money because I don't even want people to buy my course and then be like, oh no, this isn't for me. I don't like it. Like I don't want that. So that's kind of one way I'm going to structure the courses with the money back guarantee. And then probably when I do the course, I'll probably just include the software as, you know, part of the course, right? So like, oh, you're doing the course, then I'll just give access to the software, something like that. Yeah, exactly. No, I'm not. That's the thing. Like, I think these people out there that are charging like, you know, $5,000 a course, and I've seen a lot of it out there, and that's the thing too. Like, a lot of it's of course it's overpriced, but it's also just recycled information. It's just the same old like candlestick, moving average, you know, flags and pennants and all this stuff that you can kind of find for free if you just look around on YouTube, right? So I think a lot of people are just recycling old information. That's not what this is. You know, obviously you can see that because it doesn't look like anything you've seen out there. So yeah, no, it's going to be, you know, very, very reasonable compared to what other people are charging for their courses. And I think, you know, the money back guarantee too, don't you think, like, as someone who's out there on the other side of the fence, like if I was like, oh, well, here's my course and you have a money back guarantee, so check it out. And if you don't like it, then, you know, no problem. Like, don't you think that's a pretty good way to go about it? I think so. That feels right to me. Because I would rather end up having like, you know, 10 or 20 people that really are dedicated and turn them into good traders than have, you know, 200 people and, you know, they don't even want to be there and they're sending me messages all the time like, how do I do this? How do I do that? I'm not interested in babysitting. I'm interested in teaching advanced trading concepts to help people learn how to trade. Just keeping up on the chat. Yeah, and then also that's the thing too that I think is pretty cool about the channel is that, you know, you're going to see every day how I use my own methodology to trade, you know, to trade for myself. So, and I don't hide anything because you're going to see every single day the trades I'm taking, right? So like what I take, and at the end of the week, it's going to be like, oh, I called out whatever, however many trades live in real time on YouTube. And I'm going to post the results on the channel, and they're either going to be winning results or losing results, and people will get a very, black and white picture of, does it work or does it not work, right? So obviously it works, or I wouldn't be out here on YouTube, doing this. But it's fun to show, and trading publicly is a new thing for me. It's it's a good challenge, and what I told myself, I just said, look, nothing changes about the trades I put on, and I just have to literally follow my plan and don't worry about. Kind of like when you're trading for yourself, you just don't worry about the outcome. I got to do the same thing, except publicly. So I take that on as like a good challenge, because it does add an element of pressure, but really there shouldn't be any pressure, because you have something that works. It works whether people are watching you do it or not. So might as well just do it on YouTube and have some fun. That's good. I appreciate your feedback. I'm just reading it. Yeah, exactly. Yeah, and I think that's the thing too. A lot of people have just like bought, like, unfortunately, a lot of scammers have already gotten into this space and charged people, so much money for just crap courses. And so people have already, I feel bad for people. They've just paid for like a ton of crap. Oh, a monthly plan. Yeah, exactly. Like a payment plan. Yeah, that's a good idea. Yeah, I think the guarantee is pretty much like, because, right, I create the course, and I've spent whatever 15 years of my life, well, over 20 years trading, but since I did with my mentor and developed my stuff, like all the time and stuff that goes into it, right? So a lot went into it, but now sharing it is the fun part for me. And if I offer the money back guarantee, don't charge too high of a price, include the indicators with the course, right? And then also I'm doing YouTube live every day, which I'm going to continue to do because I think it's fun. So I think that combination together, like, you get a money back guarantee, it's reasonably priced, and you get to see me use it in action every day. So like, what you're getting is something that somebody's actually using and making money from, right? That's the number one thing. Yeah, I actually don't keep a journal of my trades anymore, because for me, like, what I do is, I'm just very aware of, the trades that I take. So when I used to journal, I used to do that to find out exactly, where I was making mistakes, where I was having success. And that's kind of what helped me to get to this level of consistency. But for now, most of my trades are based on everything I've learned, like, over the last, I would say, especially like the last 5 years. But I think taking, journaling is great when you're, starting things out. One thing I'm starting to keep track of is the volume profile is a relatively new addition, to the patterns and stuff I'm using. So I'm keeping a pretty close eye, like, on where my patterns are developing in relation to the volume profile. But I'll tell you what, you want to journal just, the next few weeks, the next month, you'll see every trade that we call out here together, and you'll see exactly what the results are. So on Friday was my first live stream. And did you see that live stream on Friday? So on Friday on silver, I made what I make, 8 or 9 cents on 2 contracts. And then I actually took a second trade, which was a short, and I should have held it, but I didn't, just because I kind of had my reasons, but it was also a nice winner. But so far, those are my only 2 trades so far live. And now every single morning when I go live and all the trades I take, you guys are going to get to see the good, the bad, the ugly. So, let's see. Hopefully it's more good than bad and ugly. But I trade very conservatively. As you can see, I'm incredibly selective. And the reason I'm selective is because you don't need more than a couple good trades a week to do very well. And they come in like flurries, right? So sometimes you'll get, sometimes I'll get 10 or 15 really good trades in a week. Still doesn't mean they all win. Probably like a I would, overall, it's probably about a 60 to 65% win rate. And then, you know, on average, maybe I win 2.5 to 1, 3 to 1 in terms of the R ratio. But I don't track that. And I also don't believe in fixed R ratios. I don't believe like, okay, you get in a trade, you put in your stop at this amount, and then you have to get, you know, an R ratio of 3. Like, the market's always changing. Every day is different. So I don't believe in fixed ratios like that. Just doesn't work for me. Okay, cool. Yeah, let me know what ideas you have. What people want to see. Oh, that's a good idea for the live content. Convert that to shorts. Yeah, that would be good. I think what we'll do is, you know, on the days when we have trades, you know, we can winning and losing trades, obviously, because that's another important thing too. Like, I want to show people that, you know, trading, you have winning days, you have losing days, you have, you know, winning and losing weeks. You know, sometimes, God forbid, you have a losing month. That hasn't happened in a while, but certainly you can hit stretches where, you know, just things happen. Usually it's like, I think that drawdowns happen sometimes, obviously, just because you're edge, right? There's nothing you can do about that. Sometimes the market is just doing what it's doing. But oftentimes the drawdowns get worse when people get, you know, emotional about the drawdown. Then you start like trading poorly. I tend not to do that. And I think actually trading live, for me, in some sense, is a little bit beneficial in the sense that, like, I don't tilt often, but I still can sometimes. But certainly trading live is much easier for me while I'm teaching not to tilt, because you're not supposed to tilt, right? So then it's actually quite helpful. Tom Hugard said that to me too. He said, I asked him why he trades live, and he said, well, it helps my trading because I stay more disciplined with my own trading. And I kind of feel the same way with that as well. But my point with that was that with the live content and turning it into shorts, like you suggested, that's a good idea. And we can show, like, you know, the trades we take, you know, little clips of when we're taking the trade and how it worked out, and show the wins, the losses, you know, how the day turned out. And I think just that kind of real content, because there's also a lot of people that are like, I don't know, pretending that you don't have losing days on trading. And I mean, obviously, everybody has losing days. I mean, it's just the way it works. They suck, but... Oh, I think you made a comment up. Oh, wow. 6 to 8. Sorry, I didn't see your comment last time. 6 to 8 inches of snow. And your wife said that cars are spinning out in the freeway. Oh, that's crazy. I hope she's all right. I got to drive safely. Yeah, I heard there was a big winter storm coming down. Oh, we're chatting on here, and I can see there's nothing happening here. Let's just take a quick look here. ES. Not taking that. See, my support zone for today, if I'm even going to be interested in, let's say, ES, is going to be down in here near yesterday's lows, which is right in the pocket here. You've got the near low, the middle of the moving average envelope for me. So that sort of 47.70 area, that's the level I need to see. Like, I'm not going to get long here, right? Never. So these are the things, like, when I'm trading, I'm very selective, as you can see from yesterday and today, about what specifically I'm looking for, and then where I'm waiting to take action. And, you know, that's what really stacks the edge over time, and also helps to not tilt and make stupid trading decisions. Because if you have your zones clearly defined, then, you know, it's a lot easier to not take all those trades when they're not near your zone, right? It also means you don't take as many trades, so it's not as exciting, but trading's not supposed to be exciting. So that's my zone for ES down here, about 47.70, potentially, seeing how it reacts if and when we get there. NASDAQ, same, it's about 16.7, So just the same level yesterday that I was looking at for resistance that got broken back down to the downside, I'm looking for that level now here to potentially be the area that if there's a buying opportunity and we're going to close up like this would be the area that I'd be looking to buy it. So, and then you say, okay, well, am I interested in shorting on the way down there? No, because right now I think the market in this exact instance today, I think there is more bullishness than not, because of the fact that, you know, what I covered when we started was that the daily, after that big blast up on Monday, we broke the extension there. And then I wanted to see yesterday, I thought we, you know, hey, we could break through that. But the fact that we didn't, we held above there, we consolidated, tells me that, you know, right now the daily energy is stronger than the weekly, and there is a lot of support down here. So right now I have a slight bias on the day for the long side, but it's got to come down into that pocket. There's the long-winded analysis there for the NASDAQ and the S&P. The Dow and the Russell are still kind of in their support zones here, but I would need to see you know, a pattern down in here. And the way that I do all this too is I'm matching up, you know, what I'm seeing on the daily, the weekly, I'm matching that all up with where we're at on the hourly, right? So right now, this is the Dow. If I want to get long Dow support down in here, which maybe I do, I mean, there's a decent little support pattern here, then if the hourly is in congestion, which is doing this right now, right? I wouldn't buy it in the resistance zone of congestion. I would need to buy it in the support zone of congestion, right? So that's how I like to structure it. So on Friday, the trade that you missed that I took, you can go back and check that recording. It's up on the channel. I don't know what time we can look actually the exact time here. I'll check the chat in just a second. Here, this was Friday. So the first trade I took was a short here, 2 contract silver at an average of 23.26. And you'll see in that live video, I actually covered right here, I think at the low of like 17.18. And I wanted to hold it because I thought we could have broken back down. But when I saw we were holding here at the middle of the moving average envelope and the point of control, there's also the weekly point of control was right there. I ended up covering that at a good price. That's where I made pretty good chunk on that silver. And then later on in the day, this was the one I struggled with a little bit because I wanted to short silver up here, but I didn't see this until about here. So then when this hourly bar closed, I ended up, you got that trend line there. I ended up shorting silver right in here, but I actually couldn't hold it only because in this exact instance, my stop, I wanted to be short from up here, and my stop really kind of needed to be back here. And I just, when I was looking at this going, okay, I'm pretty sure this is going to go down. I like my entry, but I really don't like where my stop is, the risk on this trade. So that's why I pulled that one with just a very small profit, like $100, but I ended up going down. So those are the first couple of trades so far on the live stream. Let's see. Here is, I'm check the chat in just a second. I want to make sure I don't miss anything here for the 9 o'clock. So stocks, we're not doing anything. Bonds are confusing. And again, I'm basing everything on the hourly, which you can see is very choppy, but I'm looking here at the daily, and then I've got the weekly and the monthly over there. And I can just see, for me, this is just not a good area to take, you know, to conduct business. Gold is the same. I mean, look at these closes on the daily. Silver pushing down. Copper just kind of hanging out. Platinum. Crude. Here's natural gas. Look at the pound. I mean, look at this. Look at the pound. Just so I don't think we're going to get any volatility until the stock market opens. That happens sometimes. I mean, I like to start early because sometimes at 8 a.m. you'll get some pretty good trades on the bonds or the metals, but not today. Okay, I can check the chat. I don't think we're missing anything for the go back to NQ here. We're not missing anything for the 9 o'clock hourly close. Yeah, exactly. I mean, that's the thing. Like, I think these people that are showing like, oh, I made $10,000 in 5 minutes. I mean, that's it. It might be true, but then number one, it's probably not true, and number two, then you're probably not showing, you know, the $30,000 you lost in 10 minutes the other day, right? So that's what I think is important, is to have like a publicly, like, if you trade every day, like this is my intention now, right? I trade for myself every day. So now I'm going public with my trading. So I'm going to be here every day, you know, unless I'm really sick or something, but you know, from 8 a.m. or I start at 7:30 streaming. So, but I'm making my picks on the hourly from, you know, the 8 o'clock hourly close onward. And depending on the day, when we have a really good day, obviously I'm going to be here streaming longer because I want to trade longer, but when nothing's happening, then, you know, like yesterday and the day before, I left typically a little earlier than I usually do. And the reason for that is I know my tendencies. If I sit and continue to watch you know, a choppy, crappy day, I'm much more likely to make an error. So that's why I'd go to the gym and decompress and just put it on the shelf for the next day, right? But on the days when it is good trading and we have good opportunities, that's when I'll be, you know, streaming longer because I'm trading my own money longer. But then having that publicly, like every single trade I take, you can go back to the live stream and you can see, like, you know, the analysis heading into the trade. Like, okay, I'm very clear about, okay, I'm taking this trade now, and when I take it, you know, I'm telling you guys, I take it. Like, this is my public track record now. Let's see how the trade works, and then, you know, we'll develop a track record on the channel. So like at the end of each week, it'll say like in the live streaming on YouTube that you can go look at. These are the actual trades called with levels and profits, and what was the net result. That's pretty black and white. But I agree with you. That's a good way to do it. And just be somebody that's real, you know? Okay, so your question, how I use bonds? You mean like the correlation between bonds, rates, and stocks? Is that what you're referring to? By the way, Steven, I appreciate all your feedback. So when I do get the infrastructure set up and, you know, have like where you can log in and watch everything, you can have a copy of the course and I'll get you the indicators and you can just have it all for free because you seem like a nice guy. I appreciate your feedback. Seem like, I mean, you're up early before work trying to learn how to trade. So, I mean, you've got some commitment there. I got to hand that one to you. So as soon as I get that up and running, you have my word that I'll just shoot you a username, a password, and send you everything, and you'll be able to rock and roll. And I'll be curious because now that you've been watching the stream for a couple of days, when you get into the course and you start, you know, going lesson by lesson, you seem like a smart guy. I don't know your background, your education level, or anything like that. I mean, not that any of that stuff really matters anyways, but you seem like an intelligent guy. So it'll be cool to see like what your perception is as you start to go lesson by lesson. I tried to build it up, you know, so that it logically built on each, you know, all the lessons and the accumulated knowledge are building on the previous lessons. And it'd be cool just to see how you're good at giving feedback. So I would love to give you a copy of the course and, you know, continue to get feedback from you and see if you're understanding the concepts that I'm trying to teach. And then you'll understand a lot more too. That's why with the live stream, for people who do end up taking the course, you know, the live stream will be a really good place to be able to discuss the concepts unfolding in real time, you know, as it's happening, right? Because anybody can look back at a chart to the left, but we're looking the hard right edge is a different story. That's cool. We'll do that. Yeah. So with the bonds, basically, I can tell you the bonds real quick. Yeah. So I promise once I get that all set up, do me a favor, shoot me an email at owingstrading@gmail.com, and then I have your email so that when I get it all set up, I can just fire over, username, password, and the indicators and all that kind of stuff. And I'll see if I can get them into TradingView for you. So bonds, how I use bonds? Well, number one, you got to realize what kind of regime you're in. So right now we're in a very rate sensitive regime, right? And if I say something you don't understand, just stop me. So we're in a very rate sensitive regime right now, right? Like the stock market is reacting heavily to interest rates, right? And the whole narrative of whether or not the Fed is actually going to start easing interest rates in March, like the dot plot says, or, does the market have it wrong? And are they going to remain higher for longer, right? Are they going to keep rates elevated where they are, until June of next year or July of next year, right? That's the big question in everybody's mind. And that is driving the stock market, right? But the rates are connected to the bond market, right? So if we look at the 10-year note is really the most important rate. So we can look at that. Here's the 10-year Treasury note futures contract, right? So if we go, I'll just bring monthly chart here for you. Let's bring the 10-year Treasury note. So do you see, this is the 10-year Treasury note right here. Okay, so let's look at the monthly chart. This will give you an idea. And then I'll tell you how I do it each day. But so for the monthly, you see how, this is going back to May of last year. And you see how we're just, each month we're going lower and lower, on the 10-year Treasury note. Well, what does that mean? That means rates, are going higher and higher, right? So there's an inverse correlation because as the value of the bonds decreases, the interest rate has to increase to entice more people to buy, the bonds that are falling in value. So you understand how, let's see. Oh, cool. You're an MBA. Good. Nice. Okay. I don't have to explain this stuff to you. See, context helps. By the way, I grew up right by Pepperdine. That's funny. I grew up surfing my whole life right there. Like I would drive over the canyon. It's Las Virgenes, right? Because I haven't been back to LA in quite a while. Is it Las Virgenes or is it? I think it is Las Virgenes, right? And then I'd swing a right and I would go up PCH and go toward Ventura County line and surf up there. It was one of my favorite spots. I grew up in Thousand Oaks, if you know where that is. It's right, Pepperdine's there. And if you just go on the other side of the mountain there, you get like Calabasas, Westlake Village, Thousand Oaks, all that kind of stuff. Okay, so good. You're a Pepperdine grad, and you get how all this stuff works. MBA grad, so tip my hat off to you. So basically, the way that I use the bonds then is that I've, right now because we're in a rate sensitive environment and stocks are reacting, pretty sensitively to every little movement in bonds and rates, then what I'm doing on a daily basis is here, if we look at the intraday chart, right? So let me find an example for you. So yesterday, right? This was one of the things that we were talking about this in real time yesterday. So here, okay, this is a really good example. You remember yesterday at this 9 o'clock, I guess this the 10 o'clock. This is about when we stopped. I forget when we stopped yesterday, but this bar here, do you remember this bar from yesterday? This is the hourly, this is the 10-year, but we'll go to the ultra bonds, which is what we were actually looking at that time. Here. So at this point yesterday, right, ultra bonds were pushing higher, right? So as you're getting an hourly move to the upside on ultra bonds, well, what does that mean? Well, during the day, rates are easing off a bit, right? So if rates are easing off a bit intraday because the bonds are rallying here right now, right? Well, that means that the stock market is you know, has more of a potential to get a little bit of a floor, right? So that's one of the reasons when I saw bonds rallying here back up into this general area. And when I looked at, for example, we were watching the NASDAQ at that time. So when I look at the NASDAQ, which at that time was, get the right date here. Here. So this was the NASDAQ, boom, right there at that exact time, right? So even though the NASDAQ, remember I gave you my level yesterday was 16,700. That was that, I always draw support in blue, right? So you got your, that was my support level coming into the day, right? And I said that if it breaks that, then I'm kind of curious to see if it consolidates below and we start heading lower, then that support would turn into my resistance level at 16,700, right? But when I saw this pullback here on the hourly NASDAQ into that 16.7 area, but I saw the Ultra Bond pushing higher. And if you remember at that time with the Ultra Bond here, remember I was thinking about shorting up here, which obviously we can see in hindsight, we wouldn't have been wrong, but still not a place I want to take risk. The reason I didn't short this, I had enough daily resistance here. It wouldn't have been a terrible short. We're right near the value area high, but the 10-year, remember, look at the 10-year here. This is because this is how I use all these markets. You see how the 10-year broke that extension and broke the value area high? Well, to me, that was enough of a reason not to get short the Ultra Bond there, the 30-year, because there was a, you know, there was a higher chance that this would keep pushing higher, or at least if we did drop here, we didn't get a big drop. And you see, we didn't get a big drop. It kind of consolidated here the rest of the day. So that told me, based on my technical analysis, that bonds were going to kind of stabilize up there, you know, at least in that moment of time. And so that means, you know, as they pushed up, rates were dropping, and then when they stabilized that technical level, then, you know, rates were also, as they dropped, were kind of stabilizing there for the rest of the day. That's what I thought with the NASDAQ here, that I wasn't interested in this trend run to the downside continuing. Now, I didn't know that we were going to get this big move back up. Of course not. I just knew that I didn't want to go short here because of what I was seeing with bonds. So does that answer your question? I think it does, right? Now that I know you're a Pepperdine MBA, I can speak really fast and just go over things. That's awesome. Of course, if we get anybody else in the chat, we'll have to slow down. So that's how I use, and it's not perfect, obviously, right? Nothing is. It's more, but I do find that it's a much more conservative way to trade is if I see a good pattern on one of the, you know, indices, you know, are bonds like generally in agreement with what I'm seeing? And that obviously depends on, you know, what bonds are doing, what rates are doing, and what direction I'm trading stocks. But in that moment, are bonds agreeing with what I'm seeing in stock, and vice versa, right? So, and there are times where I'll pass up on a trade because I don't like, you know, the intermarket correlation I'm seeing. And if I would have taken the trade, sure, sometimes I look back and go, oh, I should have taken that trade because it would have been right, even though bonds didn't really agree. But over the long run, what I tend to notice is that your odds, you know, and it makes sense logically, your odds for success on each trade are, you know, every little bit we can shift the edge more and more in our favor, it helps us, right? So when these markets are in agreement, we just have over time, you know, it shifts the edge. So I tend to try to only take trades where I feel like they're all in agreement. And as a result, you know, that sometimes means that I can be a little bit overly selective, but that's just that's the way I like to trade, right? So I hope that makes sense. Checking some stuff here. Stock market will open here in about 15 minutes. Yeah, I was looking at Pepperdine as well. I went to LMU, just down the coast there, Loyola Marymount University. That's where I did my undergraduate. And when I was looking at graduate schools, I was looking at USC, Pepperdine, but in the end, I decided to go to Sweden many, many, many years ago. That's actually like my original connection to Sweden. And funny enough, my first master's degree was in Sweden all those years ago in international and European relations, a lot of law and things like that. And I got about 65% of the way done on that particular master's. And then I met my first wife and just we moved back to the States, and I never finished that master's. But then funny enough, now I have my other 2 masters, but I always ask myself if I'm going to go back and finish that, just because I don't like having that unfinished piece of business there. If I finish that one, that'll be my 3rd one. It's kind of fun. But probably at this point, I won't go finish it because, well, maybe if I get really bored in retirement or something. But that's a ways off. Okay, that's great. I like the approach. Gone through enough periods of over trading. Yeah, exactly. Over trading is, it's about the worst thing any trader can do. And we all learn that through our own personal experience. So you kind of, you think by trading more, you're going to make more, but it's over time. And I'm saying this, I know these things now. Does that mean that I don't overtrade? Of course I make mistakes, all the time. I just try and minimize the mistakes I make. And what I'm trying to focus on is just quality and size, because it really is not about how many we take. It's about, do we have a really good edge on the ones we take? And because it's also right. It's as you start to increase size, which is really the only way we can make real money in this market. You don't want to take a lot of heat, right? So like, I don't want to take a ton of heat on a trade. Yeah, exactly. 100 grand. I know, it's crazy what they're charging for education now. It's nuts. And it's fun to go to grad school. Like, I've enjoyed my, I have another master's, one from Gonzaga, one from Arizona State University, and I've enjoyed those masters that I've done. I wouldn't say that I learned anything particularly special, but I guess, as you know from getting an MBA, it's not really about, sure, you learn some things, but I guess it's more about, it's more about just doing it and knowing that you have it and you did something that not a lot of people choose to do. I guess it's good in one sense. It shows like a level of commitment, stick-to-itiveness, discipline. You got to do a lot of work to get through these master's programs. So in that sense, I guess that's why they're important. That's my take on it anyways. But yeah, so back to the trading, that's why I think, being selective makes so much more sense than just trying to size up on those trades, because you've got more confidence in the trades, and you also just don't take as much heat on the trades, right? So like, it's kind of like, too, you've probably read about this in MBA school. If you looked at like like how gambling odds, I forget what it's called exactly, but and I forget where I heard this, but I think it's with roulette, your best chance of winning, if let's say you have like $1,000 and you want to try and win, your best chance is literally just walking in and putting it on, either red or black, just that one shot, just put it on and see what, and then if you win, that's it, take your money and walk away, right? So basically, like, what it reinforced was like, the less time you spend in the casino, the better. And with trading, I think it's very similar, where if we can just wait for those setups, hit them, and then be done, that's really what it's all about. That's what I think is the most important thing. That's another reason why on days like yesterday and the day before, when it's not moving, or it's just choppy, I'm not understanding it, the best thing I can do is, go to the spa, go to the gym, and just relax and come back the next day, because it, that's when you end up over trading and making bad decisions, right? Is when you start to, force things on a day when you shouldn't force it. And I think these are all the little things that make a huge difference over time. But they take a while to kind of get ingrained into the habit structure. All right, so 9:20, the market's going to open here in 9 minutes, 9:21. Did you come in today with any bias in terms of what you like for ES or CL? Did you catch what I said about CL when I was kind of laying the foundation? I don't know if you were in the chat yet, but earlier when I was talking about CL, I just said I'm still bullish, but I wasn't super nuts about the fact that, you know, that moved down right there yesterday, 2 days ago. And then, you know, we were bullish yesterday, but the fact that we just couldn't even get above, you know, really that 72.50 level with any conviction, considering how much higher time period support we have here. I'm still bullish crude, but it's not rallying like the way that it should with what we've got going on in the Middle East and what we're seeing in the technicals. So I'm still bullish on it, but I'm more careful because I feel like this, with this pattern here, as far as my technical analysis goes, a strong market would have immediately taken us from this side of the range here back to this side of the daily congestion range. Like we should have cycled. You know, the fact that it's getting stuck here in the middle of the range is, I'm not, you know, I'm still bullish, but I'm still waiting for a bit more confirmation because crude should run here soon, especially based on the monthly chart. I didn't catch, but I'm looking for CL to the upside. Yeah. Yeah, so there, I just gave you the recap on CL. So I'm still bullish, but I just, you know, the way I like this is like yesterday, you know, we had that, I was bullish, but I only wanted to get it long on a pushback to the true average at 71.50. You can see we never really got that. Well, yeah, we got it down in here, but I wouldn't have taken this because I'm not really, not seeing what I look for down there. But so here, when we get this close at 10 a.m., you can see crude is trending up. But for me, I'm only interested in crude again today, down 71.50, maybe 71 down in here. And that's based on what I'm seeing here on the daily. Oh, that's nice. 71.60 was a good spot yesterday overall. Let's go ahead and look at, because I just want to see if there are any levels here. I do this every day where if I'm not in a trade, I always like to look at the stock. Like yesterday, remember, I thought maybe at the stock market when it opened, had we, you know, had a big punch up, it would have been a good opportunity to short it, but we didn't quite get up to our level. But today, today I would say something similar, but to the long side. So, you know, let's see. Got quite a lot of support down there in the 16.7 area. You know, the NASDAQ, sometimes you just never know this thing. If we were to collapse at the open, I'd be watching it down here. Yesterday, I loved the idea of taking that short at the open had it got up to our level. Today, I'm not gonna put any orders or anything. Look at ES. There's still some resistance up here at 4,800 for ES, but it's these cross currents. It's a good time to And it also depends on your time frame, right? So if somebody's sitting here looking for 5 points on the ES, then yeah, you'd have a different, you know, perspective in terms of your time frame. But for me, I'm trying to catch trades in daily zones, you know, where I think I have got at least a decent probability of, you know, catching something that has a chance to go for a decent winner. I never know how far, obviously, but that's kind of like my time horizon. That's why I'm selective. I'm not looking to scalp any of this. In fact, I am highly against scalping. Not because I don't think some people can't do it. They can, but it requires just, it's most people are gonna get FOMO and blow up scalping, so I don't think it's a good idea. And also it's just kind of unnecessary. Like if you just wait and take trades, normal trades, you can do fine. Like people out there that are like scalping for, you know, 12 ticks on the NASDAQ. I'm like, I don't know, even if you get a streak of a few winning weeks, or I can't see that strategy lasting. You know, there's too much volatility. Take profit at 12 ticks. But usually those kind of scalpers, you know, they'll have a little good stretch and then just one bad day, just that's it. All right, looking at ES here. There's definitely some good resistance up here on the daily. I mean, that 48.10 level has a lot of resistance. So I wouldn't set an order there or anything, but if we jumped up there, challenged it, and got rejected and started to roll over, then I'd be interested in a short, because you could see a move, you know, back down, and you could see a close, a daily bar like this, maybe. I'd want to see how the hourly would respond to that level. So these are kind of the areas where I'd be willing to transact today for ES, and, you know, more or less same for the NQ on that on those prices. But for ES, it'd be up in here to 48.10, and for that's for resistance. For support, you know, kind of down here, like I said, around that low 46. This is where I'd be most comfortable looking for a long, and this would be most comfortable looking for a short. But I would want some confirmation, because again, this price action is just not conducive to forcing the issue. All right, 929. Open here. We'll watch ES at the open. It's kind of interesting. By the way, can we do a latency check, Steven? I'll tell you right when it opens for me. I'll let you know right when we open. Open. Oh, wow, we're very, very close. I don't think there's any latency. That's pretty impressive. Cool. So while we're waiting for the 10 o'clock hourly closes to see if we've got anything, right now, keep an eye on ES. If this was to spike up to 48, you know, above these highs up here, kind of want to, I'm not saying I'm going to short, but I want to see how price reacts up there. If there's going to be resistance today, I think it's going to be right at the near high here. 48.10. I'm just going to use the restroom real quick. Grab a piece of dark chocolate. I'll be back in just a couple minutes. Just mute the mic. Check out my new thing on the stream. Watch. Tell me what you think about this. I thought that was pretty clever. Just kidding. I thought it was pretty funny. All right. I'll be right back. All right, it'd be great if we can get up to that 48.10 level just to see how it reacts. Go ahead and turn my little quick break thingy off. There we go. All right. Home-baked banana bread and some 90% chocolate. Good, I got up early this morning. That'll be nice. So yeah, it'll be interesting to see how it reacts to 48.10. Oh, excuse me. Mute the mic while I on some of this. Wouldn't be surprised to see the Russell here catch up to the Dow. Not going to take it, but I mean, look at the Dow. I would assume the Russell's going to catch up. I'm waiting until the 10 a.m. hourly close to see if we have anything. The bonds are doing nothing right now. So just to give you an example how I might use this in real time, it would be if, let's say, we go back to the E-mini S&P 500. We see here, we're looking at that 48.10 level. So here's ES, right? We're in congestion, basically. We're just re-challenging these highs. So if this hourly close, let's say we just get a big, close up in here somewhere like this, right? In about 20 minutes. If that was to happen, and we're right at that daily resistance level at 48.10, I'll look at the volume profile as well at that point, but just all other things being equal, if that exhaust happens and we're at that daily resistance level, then I would look at bonds, and I would look at the ultra bond, the 30-year, and I would say, okay, well, right now, at this exact moment, rates are just, we're not doing anything, right? So especially if bonds started to creep down here a little bit, and that tells us that there's a little upward pressure on rates, then I think that move to the upside on ES, might be more likely to be capped, and it's exhausting into a potential daily resistance zone. That's where I might be willing to take a short. And here you can see bonds are heading down, meaning rates are edging up a little bit while the S&P is trying to push higher into our resistance zone. Not saying I'm going to take this because, again, I just don't like overall the daily and the weekly. They're just not clear right now to me, and I've learned not to take trades when they're not clear. But just as an example, that's how I would structure that trade. Okay, cool. Seems like we've got no latency right now, which is nice. The NASDAQ. And now, conversely, if we thought that stocks, because right now when I look at the NASDAQ, for example, it looks, you know, this is kind of a squeeze right now, right, on the daily. We are definitely squeezing. And if we were to, let's say, break that extension there, and let's say ES and Dow were heading higher, and it looked like the NASDAQ was getting ready to, you know, push out a congestion like this, I wouldn't necessarily buy the NASDAQ. But if I saw bonds here, and this might be the case, we'll just have to see, you know, if bonds, you know, give us something down here, like if we were to get a move like that, we'd be, you know, outside the value area low. I might consider buying that for a move back up to the value area high. You've got a lot of support here on the daily today. But again, I'm being very, very cautious right now because I can see these cross currents and just the market's got to kind of work itself out a little bit, but that could be a potential. We'll see. Let's look at gold. I mean, look at gold, just a mess, right? These are good markets to lose money in. Looking at silver, also just not really doing a lot. And again, that's because the dollar, you know, when we go back to the euro, look at this. I mean, you can't make this up. Do you remember when we looked at this when we first started, Steven? The euro is literally still not moving from 109.70. It's at 109.67. It's just interesting. Let's look at crude. I push higher. I'd love to see crude just, you know, my support level's down here, 71.50, but let's say we don't get that and this thing just starts exploding to the upside. That'd be fantastic if we could get a real, you know, because crude can move sometimes $3-4 in a day. So if this could really get going and get after these highs, you know, then we could get a real trend run today on crude. I'm always just looking at what could happen and where I'd be comfortable, you know, taking action. And certainly if crude did give a big push to the upside. Natural gas. Go ahead and just no, that's euro. Let's look at corn. Here's corn. Wheat. They definitely look weak. It's just tough with the ags, you know, like you can't chase them because you'll be looking at this and then it'll go like this. This is soybean meal. The ags look weak today, so same thing too. If those started to really get into a decent trend run to the downside, would look to play a pullback, but not until that happens. So back to ES. Okay, good. I'm glad I'm helping you to be patient. That's important. No, I don't use any alerts on Sierra charts. You know, I've tried alerts in the past, and I don't think they're a bad thing. I'm sure, you know, for example, people that end up like, you know, when you learn what I'm teaching, you'll probably find your own setups and combinations that you really like, you know, and then definitely you could set alerts for that. I don't do it, just the kind of trader that I am. I find that I like to constantly just be cycling through the charts, thinking through the different scenarios as the market's unfolding. Whereas I find that alerts are just a little too static for me, if that makes sense. I'm not saying they're bad. It's just kind of, I've tried them in the past and they just don't fit me. How do you think you would have done, you know, would you be over trading right now, Steven? Would you be like, how many trades would you typically take? And, you know, would you be scalping? Would you be tempted? Or would you be wondering maybe, like, would you be sitting there thinking, you know, should I be in? And does it help you to, like, can you see, like, when we talk about this together, how this is a pretty, like, especially right when you, I think maybe one thing that's probably helpful for you, when I point out the intermarket correlations, right? When you can see that the dollar sitting there doing nothing against the euro, right? You can see bonds sitting there doing nothing. You know, that's helpful to note that all of them are just kind of, you know, not really clear right now. Gold, silver as well. The bonds, the notes, gold, silver, the dollar, they're all not clear. Let's look at the pound because I was kind of interested. Yep. Platinum. So you see platinum and copper are trending nicely. So at some point, if we got to see, this is to me is a trend day, you know, looking like it's probably going to continue on platinum because I can see the daily is just really nice here to the downside now. The weekly is looking good to the downside. We're breaking through the weekly value area low, right? Where 70% of the volume has been trading throughout the week here. Look, this is for platinum. See how we're breaking through that. On my weekly, my value area is in pink. You see how we're breaking through that nicely. So we could get a real nice trend run going on platinum. But again, I would need a pullback. I'm not shorting down here, but just pointing out that you just wait for the markets to come. They'll come. Here's copper. We're still kind of stuck in this range, but platinum is trying to head down nicely. Crude, if it can really get going. See, we're still, see, this is another way that I use this. Like, you see how we're technically trending here in crude, right? But if you look at, you know, first of all, the OMA stuff, we're still in the middle of the envelope, so we're not really doing much. And we're in the value area here, right? The daily value area. So this is why I wouldn't buy the trend here. Now, that doesn't mean I always, you know, like if I see a trend here, sometimes I'll buy it, but just given where we are in the daily and where we are in the value area for the volume profile for the day, is, to me, you know, it could keep going, but it also could, I would rather jump on board the trend when it's more established. I found that that's just a safer way to do it. 951. Oh, we said the crude number is coming out at 10:30. Remember that? That's going to be a big one. So I'm just looking. You said you longed yesterday for a quick move at 71.60, right? And that was a good move. And then started out scalping, but expecting. Yeah, exactly. That's the hard part with scalping. Yeah, I think that's a good rule. I mean, sometimes you'll see as we keep the stream going, and I'm going to be here every day doing this. Sometimes I will, if I see something I really like at the open, I'll set an order, you know, way outside where the market is opening. If I have a lot of confidence in a level and I think there's a chance it'll jump up and tag it, then I'll engage the open. generally speaking, yeah, I think it's a good period to sit out, just because there's a lot of order flow imbalances coming in that move the market around pretty good. All right, so it's 9:52. Few minutes to go here. See that ES has come down off of our first resistance level here. It's just it's the daily and the weekly are not clear at this exact moment. There's the NASDAQ kind of heading down a little bit. The Dow doing? Here's the Russell. See those? Interesting. The Russell, so weak when I thought, hey, it could have caught up to the Dow. It couldn't even manage to catch up to the Dow. I mean, it's incredible. At least we're getting some movement. 10-year. Ultra bond. Gold. Silver. Platinum. Crude. Nat gas. I don't cycle through all, I mean, sometimes I'll cycle through all the FX futures, but well, now the dollar's trying to move to the downside against the euro, but we'll see how that goes. But really, if the dollar is that pinned against the euro, I mean, not a lot going on elsewhere. Here's the Swiss franc. I'll almost never trade this. How tight that is. Here is, this should be the CAD. Yeah, CAD. Kind of sitting here. Bringing up ES again. It's not a horrible short pattern here on ES, but I can't take it because I would just be violating. I just have a overarching principle that if the daily and the weekly are not in agreement, I don't take the trade. And right now you have the weekly. I bring this over here. This is the weekly chart. You see, this is why this week is challenging and why I'm not taking any trades right now. Is because, and this is, you can see the whole market is obviously reacting to all this because everything looks confused. The weekly here just slamming down like this, right? This big, we went over this before, but big trend run up, congestion entrance down. We broke the extension. I mean, this was looking pretty heavy coming into the week. That's why I was, you know, bearish coming into the week. But now that we're just ripping back up here, it's like, okay, we've gotten back above all this. Should have been resistance right here. It wasn't. It's now support. Where are we headed? I mean, it looks to me as of right this second that we're trying to head back up to these highs and close the week, you know, up in here somewhere. That's what it looks like. It looks like we're going for those highs on the weekly, and the daily seems to be confirming that right now. So I would say right now, at this exact moment, the weekly energy looks up to me on ES. The daily energy looks up, even though you're at some temporary resistance. They both look more up than anything. So I think the safest bet for today, I don't know if I'm going to be around here all day waiting for this, because I think the markets are going to be waiting until CPI tomorrow. But I think there should be a lot of support down in here, 47.70. You've also got the weekly value area low down there at 47.70. So if we manage to get down there, I think that's probably, a safer, nothing safe, but smarter place. Take a long. That's for ES. Just look at the Dow here. I mean, this is just, look at this. I mean, it's just tough. Russell kind of the same. Last few days, there's not a lot going on. So we're gonna get a close here in just a couple seconds. I'll read your comment and just if you ever see I mean, it might tip its hand. I can't say that I noticed that. I mean, what I will tell you is that oftentimes I'll have if I have a really good, weekly and daily pattern heading into the news, those are sometimes a really good clue that, if I've got really good evidence on my weekly and daily charts, that we're in a super strong support level and I have a good buy pattern, that'll sometimes foretell the news a little bit. Like if it looks like stocks are going to bounce, that could mean that we're, getting a softer than expected CPI, right? And okay, the Fed can lower in March, so stocks are going to rally. So sometimes I'll see things like that. But mainly I'm just trying to stay focused here, bar by bar. I think that for me, what trading comes down to is if you have a system that works, whatever that system happens to be, for me it's this, and you can't trade scared, obviously, that doesn't work, but you can't be super, because oftentimes when people get aggressive, and I know this from personal experience, that's why I'm saying this, you get too loose, right? You can swing back and forth from, too conservative to too loose, too conservative to too, so the sweet spot, I think, is just, knowing when to take your best setups. And I guess that takes time to learn what are the best setups for you. For me, I know what my best setups are. I'm waiting for them in very clear areas. And sometimes they come, all at once, and sometimes they don't come for a few days. This is pretty rare, to be honest, what we've seen the last couple of days. But I think the number one, what I was going to get to is that the number one thing about trading is just to not make all the dumb trades, like all those in-between trades that are, 50-50 trades. And of course, it's hard in the beginning if you don't know what those trades are. But once you get a sense of what those trades are, it's, a matter of then just not making those dumb trades. Because let's say on this channel over the next, 5 days, we take, 10 decent quality trades, hopefully, if I'm worth my salt. Then, ideally 6 of those will, make just 2.5 to 1, whatever, something like that. And 4 of them will lose 1, right? Well, that's great. And it's just where you can get nickeled and dimed to death is all those little, iffy trades in between where, like, kind of on the fence, and those are the ones that, just kill people. That's how I like to structure it. All right. So we are dropping. Not a bad little, so that's a nice little trend pullback there for the NASDAQ. I really like the trend pullback there on the NASDAQ. It's not bad, but just again, where is it in relation to the daily? I mean, this is just, the daily's trending up. You got to be real careful taking a pullback trend to the downside on the NASDAQ when the daily's trending up. So it's all kind of like the gears to a watch. They all need to synchronize, and when everything synchronizes, those are the trades. That's how I like to trade. I mean, look at this range. Just horrible range. Bonds look to me like they may want to go back down here, which means there could be some pressure, some upward pressure on rates. I mean, gold is already dropping a little bit so far, and bonds will usually, you know, bonds and gold will typically move together. Silver's dropping, platinum's getting hammered. So that could definitely weigh on the market. You got a lot of resistance here at this 4,800 level for ES, but again, it's just hard to trade this right here when it's, there are just better trades. Really all there is to it. Go ahead and look at Ethereum. I mute while I get some chocolate. It's lunchtime here. Well, no, it's dinner time. Second time, it's 4. I'm hungry. Not a bad buy pattern here on Bitcoin. Kind of curious to see where this goes. I'm not going to buy it, for the record. I'm not going to buy it because the daily and the weekly are not clear like everything else, but the hourly is giving you a nice little buy pattern down here in the weekly, below the weekly value area. See down here? Just kind of caught my eye as I was flipping through it. I'm not taking it. Why am I not taking it? Because the daily is just not clear. Everything's not clear right now. Let's look at feeder cattle. See, this is when the going gets tough, you got to turn your attention to feeder cattle, live cattle, and hogs. I think you wrote something. I'll just check in a sec. Funny enough, feeder cattle looks, feeder, yeah, this is feeder. Looks pretty bullish. If this was able to set up a support pattern later, got a lot of support down here into 225 on the feeder cattle, so I'll remember that. I'll check it out. Let's look at lean hog. Those aren't as clear. You can see not a lot of volume. I wonder if we've switched the contract. I'll have to check that out. Here's live cattle. Weekly looks pretty bullish. Live cattle and feeder cattle, I guess if we got a punch to the downside later, Here is soybean oil. Soybean meal. Soybeans. A lot of support down here for soybeans, but I mean, look at this weekly chart. Could be some support down here for soybeans, but I mean, just look at this. As a rule of thumb, I'm just not buying that, right? You say, okay, well, if I'm not buying it, what do I want to do? Well, you know, if I would like a big, like an opportunity to short. So, you know, something like this. This is an hourly chart. Soybeans, you can see here, like nice trend run down. We're outside the value area, meaning we're searching for more balance. There's a beautiful pullback on the hourly. Those are the ones you can just take with such high confidence that you're not going to take a lot of heat. You're going to get some. But those are the ones. And there are lots of different variations of that particular type of trade, but those are the ones generally to wait for. So that's, you know, platinum could develop into that today. You can see here on platinum, right, where daily's just pounding lower, weekly's pounding lower, and now on the right, you see how we're just nice hourly trend here on platinum. There was, you see, in London, these are the kind of trade we just sometimes you get them during New York. I mean, oftentimes you do, but today they happen during London. So right there, do you see that pop on platinum? Those are the kinds of exhaust that I like. So if let's say, you know, something starts to drop like here, I just don't get in, you know, when you're, even if I think it's going lower, I won't get in here, because for me, it's like, well, where do I have to put my stop? I mean, I guess you could put it behind one of these highs, but that's pretty risky. Really, like, I like to be, you know, behind the most recent swing high or swing low, which is why I like to take trades in that general area if I'm shorting, or if I'm longing, you know, I want to take a long down into support is what I look for. But anyways, here's platinum. So if we do get going, you could see a nice pullback at some point that gives a good opportunity. I'll check comments, Jared. Yeah, I go over all that stuff in the course. So it's the whole methodology from start to finish, and covers all the different setups. And there's probably even a lot more for people to discover, you know, because I've been at this for so long that I see it my way. But I'm curious to see, as more people, you know, as you start to understand the methodology, you'll probably bring things to my attention. That's why I'm excited about it too, because it'll be fun to see what people learn, and I'm sure I'll learn a lot from it as well. But yeah, I go over all my favorite setups and how to use them. And there are different type, you know, you can specialize, you can set it up so that, you know, if you want to be a range bound trader, do you want to be a trend trader? Do you want to be, you know, it really depends. Do you want to use it on, you know, 1 market or 5 markets? Do you want to use it on 15-minute charts or volume-based charts or hourly charts? So there's so many different ways you can structure it, right? Depending on risk tolerance, goals, personality traits. It's fascinating. I think we're doing pretty good staying out of, you know, pretty quiet, crappy markets, wouldn't you say? I mean, look at this. Look at yesterday here. I mean, Monday, you know, massive, almost outside reversal day, huge short squeeze. I mean, look, the only reason this thing was pushing up like this is because shorts were fighting it the whole day and had to keep covering. So a lot of people got killed there. So very happy to be flat there. This is just, you know, super tight. Today so far is just terrible. I think we're doing good by not, it's tough sometimes, you know. You sit here and you want to, like, believe me, I want to trade, but I'm not going to force it. Yeah, I think we're waiting for the news. I can't, yeah, is that, yeah, for tomorrow's news. Yeah, exactly. That's what I think. So, I mean, there might be some movement here this afternoon, but the fact that it's already 10 o'clock, 10:15, and we're sitting here doing nothing, I think the volatility is going to come back with the CPI report tomorrow, and then everything will get moving. And then hopefully, you know, I love the trade, so I'm standing here just watching all this waiting. Is I'm glad we've done it, because you know, these markets are definitely more dangerous than they are opportune. But yeah, I think I'm probably I'll watch it a little more, but at some point here, I'll wrap it up and just go to the gym and stay fresh for CPI tomorrow, because not looking like there's anything too exciting here. What about you? See anything on your charts that you like? Hard to a news thingy. You know, I used to have Zero Hedge Premium. I don't know if you know about them, but I liked it. But in the end, I actually find that the thing I like the best is just not real. I like to know, you know, for myself, the general narrative, what's going on. And I read a little bit of the news, but I try to just kind of stay back, have an idea of what's going on for myself, and just pay attention to the charts. Because I find oftentimes that I'll want to trade differently than, you know, maybe whatever idea I would get from the news. And in the past, that's, you know, cost me more than it's helped. Now I just try and focus on what I'm doing, and just, if I have reasons to go long or short, but it seems totally crazy in the face of some market narrative or something else, I've learned that I have to trust what I want to do. Excuse me, what I want to do, and I've got to do it. I try not to pay. We don't watch TV, so I never watch news or anything like that. I haven't watched news on TV in probably 15 years. So yeah, but I'll scroll through, like, you know, the online news sections for Zero Hedge or Yahoo, or, you know, MSN. But I don't really pay too much attention to it. Yeah, you don't see anything that you love either. Yeah, me either. I think it's these are definitely good days to be rewarded, and the charts don't lie, as they say. And I go through this not only for you, but I do this, you know, this is why I'm doing it for myself, because I'm sitting here going, I mean, am I missing out on trades? But no, I look back at these charts and I go, well, I have my reasons for why I'm not trading this on the ES. Same with the NASDAQ. You look at the Dow, it's a super tight range here, right? Look at the Russell. Not clear. Here's the 10-year. I mean, look at the 10-year. It's looking a lot like the dollar, right? Just super tight. I think you can see here with all this that the bonds, the notes, they're waiting for CPI to see, you know, what direction we're going with rates, and stocks are waiting as well, and gold, silver are waiting. So I think that's kind of the story right now. Right, we got crude at 10:30. Awesome. Thanks for the reminder. Appreciate it. I would have forgot, Steven, so that's great. This is, you see, I got so many things on my mind. It's, when there's more of us, we can forget less. Okay, we'll turn our attention to crude, because that might give us an opportunity. I'll treat the crude inventories kind of the same way as I treat the US Open or the stock market. If I see a direction and a level that I like, sometimes the inventories can be really wacky, like the Open of the US stock market, so you can go fishing with an order and see what happens. But only on a really good level. you know, clarity on direction. Bonds, yeah, so bonds are heading a little lower, putting a little pressure on rates. But stocks just, they're waiting for CPI. Like the market, the kind of markets that I thrive on are, you know, I like volatile markets. You know, I like markets that are really kind of whipping back and forth, you know, or racing up and collapsing back down, you know, volatility. And the last couple of days, I mean, Monday there was good volatility on that short squeeze, but I didn't really understand that at the time. I mean, I could see it was happening, but I was more focused on the short side. So just to not get caught short on Monday was a victory for me. Could have easily happened. And then yesterday and today, just that's really what it comes down to. There's just not a lot of volatility across anything. You're getting a little bit of moves here in silver, but it's just kind of dumping. I mean, platinum is moving, but look, from, you know, this is, that's the trade I would like. This is one that I go over in the course. You see this flash pattern right there with the near highs. You're getting that flash right into that extension. And the reason this is a flash is I call it the flash, but there's an underlying logical reason why this 3-bar push does this and why it makes this near high pattern the way that it does. That's a great pattern, you know, depending on when you have it in the right spot. And see, I like these types of patterns. This is just one of them, but I like these because when I know I can short that there, this is platinum this morning at like 4 a.m. I know, you know, my stop is basically behind that pink dot here. If I want to be a little safer, I can put it back here. Again, I'll put stops way out. I use mental stop. I put my stop in the market in case, you know, but I put it way back, right? Because I don't want to get taken out on something small. But if I lose internet connectivity or something crazy happens, then I'll get whacked because I have a pretty wide stop. But generally speaking, I like to get in on a trade like this and then I watch it carefully. And as it starts to work, you know, I know that I'm in from that, you know, spot where it's where it has to turn. Those are the ones that I like. Well, I mean, I look for all the setups. All my setups apply to all the markets. So setups that I trade and teach are, you know, valid across all the markets. This is just one example on platinum. So this is where, like today with platinum being so bearish, you know, it's like, oh, it's heading down and we're not in. Yeah, because where I would have wanted to get in, which I can't be here all the time, but this would have been this morning during London, that I'm at least getting a pullback pattern, you know, into a nice look. You're at the value area high, you know, the daily's heading down, you're in a daily true average. These are the kind of trades when they happen, they're very clear. And then when this, like, okay, since New York, this is just dropping. So it's like, this is why I don't participate, even though it's trending down and it looks very weak. You know, if I get in here, I have to put my stop way back here. You know, those are the kind of trades that I don't take. I like trades where if I'm looking to long, you know, I want to get in where I think the turning point is, and the same thing for the short. So this is a good example of the short right there. But yeah, platinum's great. Platinum moves nicely. I don't trade it often, but when a trade triggers in platinum, I'll take it. That one I missed on Monday by like 10 minutes, I would have taken that. That was painful. Because that was a good one. But that's why I started the stream earlier now at 7:30 instead of 8, because I missed that platinum trade. So it taught me, don't start the stream at 8 because you got to prepare for that 8 a.m. check. Okay, so here's nat gas. We got crude coming out in 8 minutes, so that'll be cool. Yeah, so we're not missing a whole lot, you know? I just got to look at this and go, look at these charts. If anything, this is fantastic just to, you know, time and experience is paying off here by not getting sucked into horrible trades. So the powder's dry, you know, the mental capital's intact, heading into CPI, which is good. Who knows what'll happen tomorrow, but at least we're handling this current market period well enough. And now we've got crude oil. So let's prepare for this and see what we've got shaken. So for crude here, again, I'm really bullish. Here's the monthly. Let me bring up crude on the monthly. I think I'm getting a little sick in my throat, but hopefully it won't get into anything. You know what's funny? I felt a little sick at the gym yesterday, and I took an ice shower and a sauna, and it really kind of kicked whatever it was out. So do that again today. Anyways, we went over this before. Do you remember this, Stephen, from I think yesterday we talked about it? Or do you want me to quickly cover it? This is the monthly, the weekly, and the daily chart for crude oil. You remember what we talked about here? You can just put like a Y or an N. Okay, just quickly then. The monthly, you got some good support here. This is a monthly chart. Sorry, I'm eating my chocolate. Hope you don't mind. If I connect that high here, through that high, extend it out. See that yellow dot? A really important support level, especially in this context. So we've got a lot of nice support down here on crude. The weekly is in congestion here. So if this monthly support is valid, the weekly should exit congestion to the upside. Right now we're coming out of this weekly support level. I was a little disappointed. That's why I was disappointed yesterday that this didn't get rocking and rolling higher up to these highs. And that's why I'm a little bit, you know, not as nuts. I'm still bullish. I like crude, but on all this bad news in the Middle East, this great chart setup that I'm seeing, this is a beautiful exhaust on the daily. Look at this. Just beautiful, big volume down here. I mean, the fact that this couldn't get back up here yesterday was, you know, a bit disconcerting given the context. So I'm still bullish, but I want to see what happens. So all that leads me to say, heading into the announcement, right now on the daily chart, you're right in the middle of the range. I mean, yesterday's close was right at the middle of the moving average envelope here, right? So basically what you've got here is with this one here pushing up like this, I mean, I would say on the number, you've got a lot of support here. And given what the monthly and the weekly charts look like, I mean, I would be curious to look at this support zone at 71.50. I certainly wouldn't chase it up here. Let's see what the hourly looks like. So here's the hourly crude. You know, sometimes on crude, you know, you like crude, you know, sometimes you can just get these just huge moves to the, like this, where was, you can get these huge moves. So if they drive it back down to this 71.50 level, could be interesting. I think that's really just number one, is just kind of knowing when not to take trades. Like right now we're getting conflicting signals. The hourly is giving, well, the hourly is hitting some resistance up in here, but so we might drop down. But the daily and the weekly and the monthly are all bullish, but then yesterday's behavior wasn't very nice. So I think crude's also waiting for the CPI number tomorrow. It seems like everything is. We've got about 3 minutes till it comes out. Working on my banana cake or chocolate. About 2 minutes to crude. Look at ES just pinned to 4,800. Just had to get crude up on my ladder. There it goes. Nice little move to the downside. You know, sometimes if you can just get a huge flush, I'm curious to see. So down in here, you can see this little trough. This is an important temporary area. Right in here, bring it across here. Right there. I'd be curious to see how price reacts to that level. Look at the volume profile. You've got the value area low. So this would be interesting for you if you watch here. You can see the point of control is currently here. Most heavily traded price of the day. But let's see if we start to trade a lot of contracts down here, we might shift the point of control lower. And we might shift. Yeah, you see right there, we shifted the value area lower. Did you? I don't know. Right there, we're shifting. See? So as we push lower, it's going to shift the value area lower. So if the value area low here ends up matching up with the trough and the extension, you know, starting to get down into some support. It's nothing I feel good enough about just setting an order and, oh, okay, let's see if it gets filled. That'll generally be, you know, again, when I have a really good read on the daily and the weekly, whereas right now, the daily and the weekly are both stuck right in the middle. Look at the weekly here. This is the weekly. Look at this. Right at the middle of the envelope. I mean, oftentimes you'll see we opened at 73 there. I mean, it's not a lot of volatility for a crude number. I mean, these things can really, you know, I've seen very quick dollar plus moves before. And this is even a, you know, a bit of a dud, isn't it? For what crude can do. There we go. Drop a little bit would be nice. Looking at the scoreboard, ES is just sitting at 48.02. Bit of a dud here. Yeah, me too. I'm excited to get it to you. I'll figure that out. I'll spend some time looking at TradingView over the next couple of days and just see what's involved with that Pine script. And when when I've got all the infrastructure set up, I'll send you. Did you send me an email at the owingstrading@gmail.com? I can check. Yeah, got it. Cool. Got your email. Nice. So I'll make sure to send you login info once I get that set up. Well, crude's doing nothing. ES is doing nothing, trying to push higher. You saw buy volume come in on crude? Yeah, good. Let's see. $72.80. Is that? Yeah. Certainly. I'm not going to buy it, but don't let me dissuade you. Some support here for sure. I just can't believe it's not getting. Just for me, the biggest red flag for longing crude here today is because of what happened yesterday. That's the fact that we didn't, you know, close up near 74 yesterday. The fact that we haven't even gotten there today. We may very well bounce from here, but that's why crude is just looking. It's not looking as strong as it should. Yeah, exactly. No follow through. So we've got ES here. Look, it's just, I think we're waiting for news. We're glued to 48.02. Trying to push higher. Who knows? I mean, look at this day here. Watching paint dry. That's all right. Here's NQ. Just imagine, right? Like, this is heading down here. I think this is one thing that I'll probably leave you with this, Steven, and then I'll probably hang it up and be ready to go for tomorrow for CPI. But I think, you know, one thing when a lot of people, and I used to do this too, because it's so easy to do, when you're looking back at charts, it's just so easy to look at all the places where you think you would have made money, you know, not you, but just all of us in the beginning. it's so easy to look back at all these areas where, oh yeah, I would have done this, right? But so few people think about all the mistakes in between that they will make, that they don't see, you know, back testing or dreaming or whatever, right? And that's why I think, you know, the most important thing is patience and just not taking those little stupid trades that eat you alive. Yeah, hindsight's 2020. Exactly. Always. And that's why the most important thing with trading is just to, you know, whatever your setups are, wait. And sometimes that's really hard. I have to say, yesterday was easy to not do anything. Monday was kind of easy to not do anything, but usually for me, the third day now of like just waiting, like, okay, I want to take, you know, but just got to kind of be aware of that. And that's why I'm going to step away from the computer and just call it a day. So I'll leave you with that, my friend, and have a good day. Have a good day at work. It was nice to see you again. When I get everything set up in the next couple of days, I'll shoot you an email with the login info, and I'll figure out how to get those indicators into TradingView. We'll figure it out. Yeah, cool. And I will be here tomorrow at 7:30. So if you can make it, I'll see ya. And have a good rest of the day, my friend. Take care.